No, you were doing great, Loki.
Fuck. All right, whatever.
Drop,
Guys,
drop the stinker.
all right, so I'm gonna start the video here. So yeah, hello everybody. We just lost 20 minutes, once again 30 minutes because of my audio issues. Quick summary of what we've looked through. We were checking the different companies. I'm here with Evan. We finished the screener some episodes ago. Last week we were looking at a company Calm. It's a leading it's the largest producer of eggs in the US. And basically we built this portfolio that is like a paper money portfolio, just checking all the names that we've selected so far, like the first sweep that we've done through the different industries. We're excluding utilities because they're considered a monopoly. I mean, we consider that a monopoly by a government monopoly because just basically each state controls those companies. Anyway, these are the companies that we selected so far. There are about 92 or so. These are not companies that we're investing in. This is just how we've narrowed it down. And then the companies that we like in the industries that we're interested in checking. Like Calm is one of those. Calm did interest us more. We discarded some other companies as well that are not in this list anymore. You can go to the previous episode to check it out. But Calm, we do like this. It's a really good valuation in a company that, again, is a leader and continues to grow. The concerns there seem to be about some cyclicality to the market. They did a really good year because eggs were really well priced because there was some aviary flu that, made it so that those producers that could serve their customers could take advantage of better pricing. And now, but they're doing good on all fronts. Even management was sounding really good. And the fact that they're growing on other avenues like prepared foods and specialty eggs. But now we were talking more deeply about one name that Evan has been looking for a while. It's called ACMR. It's they do wafer cleaning. Basically, when you make a microchip, you print it, or the companies that print microchips, they print it out of a sheet of metal, a type of silicon alloy usually, and in there you gotta clean that very well before and after printing that. So they're really good at that. They have really good patents apparently for that, or I mean, good enough to be growing at north of 40% for the past 7 years or so. They're a small company, so they're growing on a small base, but they're about 700 million now in revenue. And then from that tangent, we got deeper in this past 30 minutes that we've lost into looking at other chip companies, and we were talking about how Intel has really shut the bed, in which they were leading in chips in an industry that is growing exponentially, and they have been losing revenue for the past 3 years at an accelerating rate. And from there, we were checking other names, like for example, these two, SK Hynix and Samsung, as the leaders in Korea and in the world. And we were talking about that because in America, there's not enough of an infrastructure to support, not only just to support the need for chips and that type of electronic infrastructure for AI, is the fact that they need to be made in America for a security concern. So Evan was speaking to the fact that Intel is being kind of rescued by the government because they're just not being able to do the job themselves, but America needs things to be done in soil because the largest producers of chips are either in Taiwan, which is the largest, or in Korea with, in Korea, again, with Samsung and SK, these are more like memory producers. But again, electronics don't come out of the US and it's becoming a security concern. And anything that I'm missing here of what we talked in the past 30 minutes, Evan?
No, good synopsis.
Good synopsis.
Let's go to the Excel sheet, dude. Let's
Yeah,
start.
right.
Let's start just because it
Ah,
was
right.
good
The
that
other Excel sheet, yeah.
it was good that it was just a big tangent
It
because
really
now we
was, yeah.
can grab the first company that we're gonna look at.
Was it here? Yeah, okay. So, I mean, I was thinking since we were going to go ACMR, but I feel like maybe what we should do is narrow it down further, like we were doing, like look at companies that we don't know and do like that way we can discard some of the companies that we saw. We're like, okay, we're not interested in that. And that way,
Yeah, just do me a favor though.
yeah.
Add to the
Oh,
financials.
right.
Here, pull up. So first of all,
Oh, zoom in,
pull
maybe.
up Twitter real quick.
Yeah. This.
Let's read through this on stream and then we can add them. So go to log in.
Fuck it. I mean, if it asks me too many questions, I go to
Friday.
my other account. Yeah, that's too many
Like
questions.
we should make a Twitter for this, honestly.
Don't we have yours though? Like, wouldn't it be
Yeah, we
better
do,
if we
but
direct people
I,
just to yours? Because
I
I'm not gonna be
suppose, yeah.
maintaining that all that Twitter.
Yeah, I should start posting our clips on my Twitter.
Oh, I
Actually,
can
now that I
link
think
it to
about
your
it.
Twitter from. But I mean, maybe you want to select which ones, right? I assume.
Yeah, yeah. Like I
Yeah.
don't want to
Yeah. Yeah.
spam.
Fair. 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 Yeah. This is not what I want to do. My bad. I want to search from
It's
here.
fine. It's fine. Go to So go to Bill Ackman.
Billy,
Billy. Go
Francesca
down.
Gagin.
Ah,
This
okay.
guy is such a dad.
This guy
Yeah.
tweets way too much.
I know.
Go down,
They're all
down,
reposts. Is there
down.
any way to see originals, or you need a repost?
They're all there.
Yeah, this guy's so
He's,
in yeah,
yeah, he's locked in.
bro.
All right, keep keep going.
He's in everything, bro. Highly opinionated individual.
All right, wait. Let me just link you the tweet, dude.
Did you see the Maduro thing? I mean, obviously you did, right?
Yeah, that was
Wild shit,
crazy.
bro. I mean, that was a beautiful operation in the sense like that's so efficient, bro, to just get in a country overnight in a matter of hours, be able to arrest the president who built a
Yeah,
bunker to avoid that.
with no casualties either was the craziest
Golly,
part.
that's so. I
He
feel
just
like
got in
yeah,
there, got out.
this is the level of when you have like really good intelligence and like able to like the new like the modern warfare these days is that like just like quick like surgical strikes, man. Any of this, or you're just searching for the tweet yourself now?
Yeah, I'm just trying to find it. Just because I want to read it so that I can get your opinion as well. Because I'm not. I actually talked to George at Quantic today because I was curious about it myself.
Yeah,
It's one of those
you always
things.
gotta be careful with Billy, bro. You know how he be speaking out his ass.
No, 100%. But I think it's a good little play with a catalyst.
Hmm. We love them catalysts. I mean, yeah, these
The tough
guys.
part is figuring out when. But obviously, like if you take a long-term view, then it shouldn't matter. Why is it so hard to find?
Yeah, for real. Is there anything I could search? Maybe.
That's what I'm doing right now.
Hmm. All right.
I got it. Don't worry.
Yeah. So what was I gonna say in the meantime? Oh yeah, another
Lee
thing.
Lu,
Huh?
Lee Lu, Lee Lu,
Huh?
Lee Lu, Lee Lu,
What do you
Lee Lu
say?
full ported into Pinduoduo this weekend or like sometime this year.
When you say full ported, first of all, I need some context. What is Lilu?
Lee Lu is like a legendary investment manager. He's like probably top three
Oh, it would
of
be
all
like
time.
Lilu like this? Leelu?
No, Lilu.
Lilu. Oh, okay, okay. Lilu investor. Yeah,
He
Lilu. Oh,
full
but separate. Okay, okay, there we go. And
he
then you
full
say,
ported into Micron at the bottom, made a killing. Full ported into
ah,
Google directly after, made a killing, and then now he's full ported into Pinduoduo.
when you say full ported, what does that mean?
A
I'm sorry.
full portfolio. Like he
Oh,
just
what? He does that? There's no. He does full
he's a
like
beast, bro.
all his
He
money in
doesn't
one
care.
stock?
Yeah, he's got insane conviction. He's the man.
Damn, I love that, man. That's another level, bro. I mean,
Yeah, I'm
that
telling
actually
you, he's the man,
makes.
dude.
I mean, obviously it makes sense, but it's ballsy in the sense of like he's
Him
saying,
and
if this is the best
the owner of
company,
the
why
Mets.
not put all the money there? Like, why
Here,
do two?
pop that up. What I just sent you on Discord.
Oh, okay. Billy the man. I am often asked for stock recommendations, but generally don't share individual names unless I believe the risk versus the reward is extraordinarily compelling. As we look toward 2025, one investment in our portfolio stands out for large asymmetric upside versus downside, so I thought I would share it. Thank you, Bill. We have owned Fannie Mae, this guy, and Freddie Mac common stock for more than a decade. Today they trade at or around our average cost. So he hasn't made money on them for a decade.
Mm-mm.
As
Yep.
such, they have not been great investments today. What makes them particularly interesting today versus any other time in history is that there is a credible path for the removal from conservatorship in the relative short term. What does that mean? Do you know?
So yeah, Freddie Mae and Freddie Mac and Fannie Mae
Right.
are the two biggest mortgage uh
Yeah, right.
like mortgage companies in the U.S., right?
Yeah, but they
In 2000,
remind me, are they some type of mortgages or they just aggregate private mortgages also? Like they're not because I
no,
thought
they're all of them. They're all of them.
okay, oh, I thought it was some government thing. They're not necessarily related to government, they are.
Right, they are. So here's the
Oh,
thing:
okay.
they were quasi government
Uh-huh.
in that they were the only ones that were allowed to do it.
Okay.
In 2008, they were put under government conservatorship, which just means that
Oh,
they're completely like their balance sheet, everything is completely controlled by government.
okay.
Um, and so the common stocks of them stop trading in financial markets. They trade over the counter now.
Hmm.
Um, but yeah, they're essentially
Interesting.
handcuffed. They can't grow. Like they're everything's controlled. Their stock doesn't
Ah,
grow. Like if you look at their what they're worth versus what their stock is worth, it's insane, right? So this is a financial company. Obviously, if you go into their balance sheet and look at their book
what the fuck?
value,
Yeah, okay. Let's see. Fannie Mae, for example, would be good, right? Out of the two.
yeah, if Fannie Mae is the bigger one. Freddie
Okay.
Mac is a smaller name. I think I don't know what the difference is really. Again, it's like I'm not very knowledgeable
No,
on
right,
this
right,
stuff,
right. But
but
just to give a general view before we continue reading the
look,
tweet.
they have four. Was that trillion?
What do you want to see?
My
Balance
God.
sheet or income?
Yeah, balance sheet. No,
Okay.
balance sheet is the only thing that matters. This is their overall health. Is that 4 trillion? I think that's four
Yeah, I think this
trillion,
is
bro.
in millions, so that's gotta be 4 trillion. Yeah.
4 trillion in assets, and then go down total debt, and then their total equity. Like rough estimate is about 94 billion, right?
Mm-hmm.
And it's been growing every year. This is just the growing with the economy pretty much. But and then if
Right.
you go to their stock, they're worth much less than 94 billion.
Oh, you're saying even though their equity on their balance sheet is 94 billion, their
Yeah,
market cap is lower than that. Interesting. Let's see.
much lower. They trade at like point 0.1 of book value.
Is
Yeah,
it the,
12
no?
billion.
Oh, where is it? What did
Right
you
there.
say? Oh, here, my bad.
12
Yeah.
billion.
So how does that work? Why is that?
Essentially, I don't really understand, to
Okay.
be honest with you. Like I'm just now getting my brain around this whole thing because I don't
Right.
really understand it either. But the government just controls the entirety of this operation, you know?
Hmm.
So like,
Oh, so maybe the market cap, like, I mean, I guess it kind of makes sense in the sense like if the profits, like if the shareholders know that this growth is not gonna be distributed, like they kind of cap like the company itself, even though like they know that the wealth is never gonna come out as much. Maybe that's where it's coming from. That this equity is never gonna be distributed to shareholders as
they
much.
put controls. It's kind of like a legal measure. Like for instance, I think Wells Fargo is under a very similar situation. So because of the financial crisis, Wells Fargo can't trade for more than like point 0.8 times their book value. It's
Oh,
something like that.
really?
Like, yeah, it's something like
But how do
I
you
might
do
be
that? Yeah,
wrong about that.
because that sounds
Here,
like
just
market
go back to the
intervention.
Bill Ackman thing. Let's read
Okay, my
through it.
bad, my bad. Yeah.
It
I
is.
was just, I guess, trying to understand removal from conservatorship, but I guess that like that's the clamps. Anyway,
Yeah.
that is in the next 2 years. During Trump's first term, Secretary Mnuchin, I think is how you say it, took steps toward this outcome, but he ran out of time. I expect that in the second Donald Trump administration, Trump and his team will get the job done. A successful emergence of Fannie and Freddie from conservatorship should generate more than $300 billion of additional profits to the federal government. This is on top of the $301 billion of cash distributions already paid to the Treasury. So yeah, okay. So is the government right? Because okay, are these companies that the government rescued during the 2008 crisis, and maybe like now they own a bunch of the
Yeah.
equity? Okay, so the
Yeah.
government is a large shareholder.
These are the main
Ah,
companies behind the entire financial crisis because the financial crisis was all about
ah.
MBS, mortgage-backed securities, and these are the two companies that controlled the entirety of the MBS market. You
Okay, so
understand?
I'm think I'm starting to connect the dots in the idea that the market cap here of 12 billion is of the outstanding shares. This equity is the outstanding shares in the market plus the shares that the government has, plus whatever other shares that are not available to common, right?
Essentially,
So
yeah.
I mean, yeah, I mean we're guessing here both, but then maybe here the whole thing of This is the government selling some of the stock, which is a great move
Yeah.
by the government. Okay, we're removing $8 trillion of liabilities from our government's balance sheet, right? Because they wouldn't own the company, right? Okay, maybe,
They
maybe.
went on the company. Yeah, that's what it is.
The GSEs, do you know what that is? General.
No.
Okay, what is it? It's probably referring to Fannie and Freddie Mac. It's probably. What are the GSEs in finance? Private companies, government sponsor enterprises. Okay. So GSEs are
Okay.
companies that the government has bought stock in. Have built $168 billion of capital since Mnuchin ended the net worth sweeps. Okay, another term. Net worth sweeps. All right, it's 2019. This is already a fortress level of capital for guarantors of fixed rate first mortgages to credit worthy middle class borrowers. Okay. So I guess this is related. I mean, we'll go deeper in a second, but I suppose this is related to how those mortgages are provided,
Yeah,
and like the
it's just
company has
he's
been
just
doing
speaking
better.
on he's just speaking on their financial health
Okay,
essentially.
okay. Capital for guarantors of fixed rate. First mortgages to credit worthy middle class borrowers. Right, so they're just healthier in the mortgages that they provide. The scenarios we envision is that. This scenario, just one, that we envision is that one, the GSEs are credited with the dividends and other distributions paid on the government senior preferred.
Bonds.
Right, which would have the effect of fully retiring the senior preferred at their stated 10% coupon rate with an extra $25 billion. Are credited with the dividends and other distributions paid on.
This first thing is, I mean, to me, it just seems like a stretch, but
Okay, I'm trying to
yeah,
understand it. Credited with the dividends and other distributions paid on the government senior preferred, which would have the effect of fully retiring the senior preferreds at their stated. Okay, so they're saying the preferred stock is coming due. What they
yeah,
retired.
like like the government is selling Fannie, like relinquishing its control, and then Fannie pays out
In
they pay out the rest.
other preferred stock. Wait, but if they're retiring the stock, they gotta pay off the preferred stockholders, which I guess what you're saying.
Yeah,
Fully retiring
is the government.
stated 10% coupon rate with an extra 25 billion in profit in excess of the preferred state's yield to the government. Oh, because the government holds those preferred shares. Right. So
Yeah.
they're right. Okay. So they gotta kind of finish those. Okay. This extra profit could be
Mhm.
justified as payment to the government for its standby commitment to the GSEs during
Yeah,
conservatorship. Okay. So yeah. So they're just
exactly.
killing the debt in the debt in the form of preferred shares.
They're getting rid of they're just getting rid of their position. The government is getting rid of their position. The
Right.
GSEs would pay that, and that would be like the thank you, essentially, is what he's saying.
So then, I assume then the ones paying the government for this, like the companies are buying themselves out of the government, kind of thing.
Yeah, exactly.
Because also that makes sense with equity moving like this, in which return earnings is reducing because now they've been gaining enough money to buy themselves out of the government control. Right.
Yeah,
Preferred
all
stock.
those retained earnings are negative because I think the government just takes it, right? Pretty
Mm,
much.
yeah,
Like
interesting.
like Fannie isn't allowed to keep any of its earnings. They shell them out in, I guess, in preferreds, according to
No,
Billy.
but I assume to some extent they must be able to withhold some of the earnings because the return earnings, I mean, it's an accumulated deficit. So it's not like they are actually returning any earnings, but it's
Yeah,
more like they're paying
not
off their
the
loss.
entirety.
They've been
Yeah,
paying off their
exactly.
loss for years, and now they're getting to the point, which I guess is the point that he's making of they're now cutting even with the government, so the government's going to allow them to be loose.
They're not, by the way. None of
Oh,
this is just
right.
a theory he
Right, it's a
has. It's
theory
not.
that it should come to
Yeah,
that because the Trump has mentioned that he would do it. It makes sense in the sense in the terms in the sense that the company has gotten to that financial
right.
standing, like they're healthy enough, and the government would make money out of it, and they wouldn't have to hold that. What is it? They say $8 trillion liability. Okay, the
Yeah, between the two
GSE's
of them, it's probably there. Yeah.
the GSE's capital ratio is set at 2.5% of guarantees outstanding, a level which would have enabled the GSEs to cover nearly 7 times their actual realized losses incurred during the great financial crisis, a true fortress level balance sheet.
Yeah, Just they're just healthy, is what he's saying,
All right, which would enable
because of
to
government
cover
conservatorship, pretty much. But yeah, like as of right now, he's saying essentially that they're at the healthiest balance sheet levels that they've ever been.
the 2.5% capital ratio. What is this?
It's the total capital to liabilities. Come on, bro. We did the CFA.
What do you mean? No. What do you mean?
It's total capital, total tier one capital, or total capital in general.
Yeah.
The amount of liabilities that the bank has.
Yeah, but that wouldn't make sense because then they're saying 2.5%. So they have a huge amount of liabilities.
Yes, but it's like capital is just like unencumbered cash, I think, pretty much. Yeah, Google it. It's not like assets, you understand?
Because I feel like,
Dude, we just saw it. Like they have 4 trillion in assets, 4 trillion in debt, but only 90 billion. It's like 2%, is it not?
core capital against risk-weighted assets. Oh, okay. So, right. So the denominator
And the
here is the
liability, yeah.
risk-weighted assets.
Yeah.
So,
Okay,
yeah,
the
so having a
liability,
low percentage. Wait,
No, that's
I
not.
still don't
2.5
get
is
it.
not low. 2.5 is not low. He's saying it's high.
No, right?
Yes.
How is it high?
Oh,
2.5%.
it's high. Dude, because capital, like, you don't understand.
Huh?
Financial institutions are
Like,
the most leveraged entities in the entire world. They require insane leverage to make any type of profit. 2.5 is high.
yeah, something's not adding up in my head. I don't know why. Acting a financial with the percent SIRE ratios generally of 8 to 10% for major banks signal greater stability. I'm trying to understand how this is calculated. Measure a financial institution's core capital against its risk-weighted assets. To assets like
Capital is just, it's like equivalent to equity. You just think about it as equity. It's the equity over the assets. And then you can go into their balance sheet and look at exactly what that ratio is right now as of 2024. It's probably 2.5, like he's saying.
banks are required to hold a certain level of capital or assets in the reserves. These are divided into tiers. The equity component of a tier 1 company must have at least.
Well, you don't believe me, bro?
No, it's not that I don't believe you. It's that I don't understand
It's-
what you're saying.
Capital is just equity. It's like it's
Again, I don't.
unencumbered cash. What? What don't you know? I don't get it.
So this is kind of the
This is the measure
the
of their equity
margin
divided by
between
their
their
total
liability
assets.
and their assets.
No. Yeah, capital is no. 2.5 is that the margin between their assets and their liabilities divided by their assets.
Right.
Right?
Okay.
The difference between their assets and their liabilities is their equity, which can be thought of as capital. Capital ratio would be their capital divided by their total assets. Right?
Right. I see here 3 million return earnings of 2 million equity and return earnings, which is equity. So it's tier 1 capital. The bank has risk-weighted assets of 50 million. Right. So
Yeah.
equity divided by assets. Right. What you were saying, I know, but I just wasn't understanding it as well.
And so you can check it. Like if you go if you go back to the Schwab to their balance sheet
Right.
right now, you can literally look at the numbers. So
This, right?
94 divided by their total assets,
Which
which
would
is
be
like
similar to that, right? Yes.
4,000. Yeah, so 94 divided by 4, no, their
Yeah, no,
assets, not
my
their
bad. Yeah,
liabilities.
yeah, which is what is here. Yeah, with this. Yeah, total liabilities, but yeah, this should be assets. It's the same thing, right? So this, right? So
It's about 2%,
any time that is above 0 is good, and then the higher it is, and it's gonna be
the better.
right. I get it now. Okay, sorry about that.
No, you're good. But again, this is so like here it's saying that essentially like 8 to 10% is good. This
Right.
is not exactly a bank. It's
Right. It's a government control entity, so they don't need to have that high of a margin, I guess, of equity, right?
Yeah, like 2.5. I think is what he's saying
Right.
here. Is his notion is that it's good.
I mean, and as it says here, for mortgage insurers, 2.5 is what is required. Because banks is a different thing, because a different type of business. Mortgages don't need to have that much capital on hand. Okay.
Yeah, exactly.
They guarantee the first 20% of losses and often riskier mortgages with less creditworthy borrowers compared with this GSE's guarantee with attaches at the senior most less or equal to 80% of the property's mortgage value. Wow. Damn. They guarantee that? Right, because the government backs them. Right, okay.
The government guarantees that. Yeah.
Mortgage insurers therefore typically incur 100% losses on a default, whereas by comparison, GSE's losses on a default are minimal because the government
Right now,
backs them.
yes, right now.
Right. The
But
G-
we're
uh-huh.
it's a moot point, I think, what he's saying there, because the whole thing is that he wants them to not be GSEs anymore,
Hmm. Okay.
right? Pretty much. But anyway, I mean, it's Bill Ackman, bro.
Yeah,
He's
the
always great.
GSEs also have enormous ongoing earnings power, particularly during challenging periods in the housing market where they tend to take significant additional market share. What? Okay, well, but this is again, isn't this as dangerous? Because if the company that was involved in the financial crisis of 2008 becomes again a market company when the housing market is booming again and probably overvalued, I don't know. Is it booming though? In Spain it is,
Nah,
so maybe
it's
I'm
a little,
confused.
yeah,
Anyway,
yeah, it is, but it's a
oh,
little bit different because there was no controls prior to 2008. Like the whole issue of 2008 is that there wasn't like a maximum loan to value or like a
ah,
there was also not all these credit derivatives. Those credit derivatives came about
right.
during the financial crisis, got abused,
Okay.
lost like 100% of their value, and then now there's like a bunch of
Okay.
laws that govern this whole thing.
Okay. Assuming a Q4 2026 IPO, the two companies collectively would need only raise about 30 billion to meet the 2.5% capital standard, a highly achievable outcome. Freddie needs more than Fannie, which will need little if any capital, because it has grown its guarantee book more quickly than Fannie in recent years. We estimate the value of each company at the time of the IPOs in 2026 at $34 a share. Wait, it says they're IPOs, but they're
Yeah, because
public.
they're OTC. Yeah, they are public, but they're OTC.
Right.
They would IPO
Okay.
onto a major financial exchange, pretty much.
Right, because I guess at this point it's kind of buying shares from the government or something, or so sort of. And
No,
here they will go
you're buying
public.
an OTC.
Yeah, but why is it OTC?
I don't know.
Like, yeah, like that's what I mean. Like, if it's over the counter, it's because I'm buying it from something that is not
Yeah,
a public
I'm like
exchange, right?
I'm just out of my depth on this,
No,
to be
I got
honest
it.
with
I
you,
got it. Yeah,
but
I'm just asking out loud, not specifically. Like, we assume their IPOs are priced at $31, reflecting a 10% discount to their intrinsic value. What? How does that even make sense? That they
he's
already
saying they're
this?
worth.
I know, but he's saying he's predicting the IPO to be priced below the intrinsic value. Like when
Yeah.
the IPO hasn't even happened. Like they, I don't get it. Why would they sell it at a discount? Meh.
Well, he's saying if they were to meet the capital standard, they'd be valued at that number. So like based on what their total assets are times 0.25 would be their IPO price, is what he's trying to say.
Oh,
You get it?
okay. I don't know if that's what he's saying, but
That is
okay,
what he's saying.
okay,
I mean, there's no other way to calculate it. Is like he's
okay.
2.5 is the capital standard they would have to meet, right?
Yeah.
So they would raise whatever. So whatever their assets would be in the time of 2026 would be that's what would be essentially what he's looking at as their IPO value. And you can calculate that if you want to as well.
We
You
calculate a
just would,
profit to the government of 300 billion, assuming full exercise of its warrants and a sell down of common stock in both companies over the five. Yeah, but again, yeah, okay. So the government is gonna be selling the stock though, if they do
yeah,
want to make the profit. With the
yeah,
junior
but
preferreds, uh-huh.
the companies would be revalued. So like,
Right, right. Yeah, no, fair enough. And I mean,
yeah,
it's also true that maybe the government doesn't sell them, owns this common stock. We believe the junior preferreds are also a good investment, but they do not offer near the same return because their upside is capped. Trump likes big deals, and this will be the biggest deal in history. I am confident we'll get it done. There remains a high degree of uncertainty about the ultimate outcome, so you should limit your exposure to what you can afford to lose if you choose to invest. I still don't quite get what is the he's saying. Like, what is the difference between, like, if I buy? He's saying, is he saying if I buy one share here over the counter, this is gonna turn into 36?
pretty much, yeah.
I don't get it. Yeah, like, cool, but I don't. I don't get why exactly. Why would they we estimate the value of each company at the time of the IPO at $30 per share?
It's what I told you in the beginning. Like they trade at like 0.1 of book value.
Okay.
They would get revalued to around 0.7 or 0.8 of book value. In this case, not exactly. They would get revalued at 2.5% of capital, and then that's where you would make the money. They're not worth like those stocks that you're looking at. They're not worth that. That's what's what he's saying essentially. But they're not worth that for a reason. They're not worth that because the government controls them. If the government were to relinquish control and capital markets were to get involved, they'd be revalued at normal mortgage-backed security company rates, and that would be around those prices.
Okay.
It's all listen. You're. I think you're having an issue understanding what he's saying. I am too. Don't get me wrong.
Okay.
But it's sound. What he's saying is sound, and we can trust that, right? Because he is fucking Bill Ackman. Okay. The big thing about this is that will it happen? You know, because I haven't heard anything about it happening at all. Like I don't think Trump is focused. I mean, he just captured the fucking president of Venezuela. Like I don't know if he's really focused on this thing, but you never know. You never know. And for my conversation that I had, I genuinely had it today. I asked him about it today, this morning. Um, and he said that like it makes sense from all angles to do it, right? Because the whole reason that they're in the government conservatorship is because of 2008, and they've built up an adequate book, and so now he's saying it's essentially time for this to happen, and it makes sense if you think about like the benefit. That's why he speaks on the benefit to the government. The benefit to the government is huge, and right now it really needs it. You know what I mean? I don't think it can continue to hold all these liabilities because of how things are with their balance sheet, essentially. You know. So it makes sense. I just don't know if it'll happen because it's one of those things where this is like a critical piece of infrastructure for the United States.
Okay.
But we are a free market economy, and
Also,
so
I just don't understand exactly the dynamics of me buying a share on a company. Like, is it kind of like I'm investing in private equity? Because if it's before the IPO, would it be what would this
you're
IPO?
just you're investing in a piece, whatever piece the government wants you to have of this company, and whatever valuation the government has, whatever valuation the
Yeah.
government wants right now.
Yes, I get
You
that.
know?
I'm just saying, if I now go and I buy a share of Fannie Mae or whatever,
Yeah.
I'm buying a share of a company that will go public in a common stock exchange, right?
Yeah, yeah.
Okay, right.
It'll
So
move. It'll move. It's not gonna go public. It's not private. It's
yeah,
gonna
but
move to a proper exchange.
why does he call it an IPO? Initial public offering. I don't.
I don't know.
I'm confused, man. Because it's kind of like I don't know what this would do to the dilution of the shares. Like, do they sell more shares? Because they don't have. Do they have? I mean, they must have because they were a public company. So, is it the same common stock? Is it like the same outstanding shares? I guess. I mean, again, I will have to go deeper in the sense of knowing how any of this stuff works.
You know what sucks about this?
What?
It sucks that there's no options.
On Fannie Mae or
Yeah, on either.
because they're over the counter, you're gonna buy options?
No, you can buy options on over the counter. It's just these specific companies don't have options chains.
Oh, interesting. Wow. Okay. And why do you want the options? Because
Click
I
it.
mean, oh,
Because
here.
again, it's
Oh, here.
a catalyst. It's a
Yeah.
catalyst event.
Yeah, but I mean, he's saying end of 2026, you buy options.
Yeah,
Well, I guess eventually, right?
it's
Maybe not.
1 year from now. Yeah, you buy 2 year options.
This 2 year. Well, I mean, some of them, right? Yeah.
There's like 3 year options there.
Well, not all of them. I couldn't find 3 year options or 2 year options for the Argentinian banks. I found
Oh
like a.
yeah, of course.
Okay, yeah, okay.
But actually, you might not know what you're doing. Go to the Argentinian bank.
Okay.
Go to
I
the
mean, that is
Argentinian bank.
very probable.
Go to the chain.
Like here or no?
This should be fine. Yeah. Nah, where's the chain? Go
Okay.
to
Trade me or what are you on?
no, the little drop down next to their name where it says buy and sell.
Nah.
Wait, what? All right, hold on. Go down.
Maybe it's because I'm in the research? No, I'm not gonna.
Oh yeah, close that. Yeah, go up again. Go to options
Ah,
on the top. Yeah, and now go to strikes. Actually, no, go to expiration. Go to all, and now scroll down. Right there. Yep, 3 years, 2 years.
747. I see.
Yeah,
Oh, I got this ones. But I
those are
mean,
one
this.
year. Yeah,
Right. But I mean, I got them. Yeah, but not that long ago. I didn't see
yeah.
these ones. I don't know if I didn't see them or they weren't there.
Telling you it was a skill issue.
Good.
Go to 747. Go to the 747 chain, and then change the
Ah.
strike. Change the strikes to 16.
What do you?
Up
Where?
at the top. Up at the
Up,
top where it says strikes.
up, it up.
Yeah, yeah,
Ah, to see
yeah.
16 strikes.
They
Oh, okay.
they give you everything. Yeah, they give you everything, bro.
I got 70. Well, this is just a different company. I don't want to get into it, but yeah.
Yeah,
Yeah.
it's just it was a skill issue, bro. No problem.
Okay. Yeah, I mean, I might
But
then
also,
switch them then now or something. I don't know if I want
no,
to. I mean, who will? Yeah, they'll be more volatile. I mean, it's still a year or
it's just
so.
more expensive. So it's
It's
like
more
double the
expensive,
collateral. Like
right? Because of the theta. Theta.
yeah,
Fair enough.
like look, a 50, and at the money, what's this thing trading at? 55, 50 something.
The stock?
Yeah, 53.
53.
Yeah, 53. So if the 55s are 21. No, let's say 16. Let's say 17, and then go to the 1 year
Well,
ones.
last was 20, but anyway, yeah.
Yeah, that's not real. It's a Sunday. Yeah, you see, like much cheaper.
Yeah. And the spread is less
Thir-
too, right? It's $4
13,
spread.
20.
And where's the spread here?
The spread doesn't matter because we're
Oh, okay.
not in market hours. It's just like hypothetical
Ah,
shit.
okay. Fair. I mean, it's also
All
like
right.
there's not much volume, so the spread is gonna be more for these ones.
Yeah, yeah, 100%. I mean, it's gonna be a big spread, but that spread that you saw was nonsensical. It was like 16 ask, 17 bid, and 21 at. Like, it doesn't make any sense.
Right.
The real spread is closer to those numbers, like between 1650 and 1690.
Ah, okay. Uh, okay, we've gone in like a tangent here with Billy. Because I don't know what to do with this.
Yeah,
I will have
I'm
to
saying we just
understand
add
all
it.
of it.
Let's add it to the financials in
Ah,
the
okay.
Excel sheet, and then when we get there, we'll look at them a little bit closer.
I see, I see. So it's Fannie Mae, and what's the ticker for the other one?
FMC, FMCA? I don't know.
FNMC? No, that's the one we just.
FMCC or
Oh, okay,
something.
okay. Well, I'll look it up. Yeah, one second.
No, look it up. Yeah,
So that would be what? Insurance banks? Would it be banks? Would it be a different one?
yeah.
GSE?
Mortgage
I could
company.
put.
You can do banks,
Okay.
but go to like we just type in like
It should be
credit.
its own thing. Yeah. Oh, credit. Yeah.
Yeah,
No, this is a credit card. Yeah, we're just doing one.
there's a new one. Yep.
Yeah. Mortgage.
Creditors,
MBS.
MBS. I guess. Yeah. They're not MBS, but they're MBS providers. Like they're kind
The
of like
originators of
A, B,
MBS.
and C. Yeah, they are originators in MBS. Yeah, but anyway, it's fine. MBS is good enough to know what we're looking at.
FNMC. Am I writing that
I,
right?
I don't
FNMA.
know.
Yeah. Okay, that's right. And now the other one is
FMCC.
Fannie Mae Freddie. Uh,
FMCC.
FMCC. All right. So then
Alright,
you're
cool.
telling me to buy these ones too in the paper money, like when it opens?
Yeah, yeah.
I'll keep you doing for that. I'll keep buying at the same, like I'll invest for any new names that we add. I'll just buy at the
Add them
same
here.
like value that we bought, the same cost, which should be if I'm able to like what is it, like 18, whatever I have in cash, yeah. 187. All right.
Yeah.
Because it was the
Yeah, we
original
can
division. There was some argument with me and the ChatGPT. It should have been a different value, but anyway.
we can add we can start selling also stuff that we don't want anymore.
Yeah,
know?
yeah. The ones that we took out of the Excel are not there anymore. But if we sell, yeah, if we get rid of any other, we will sell them, right?
Mhm.
All right.
Yeah.
So,
All right, let's look now. Let's get started on the real stuff.
so we gotta select a new one. Should we continue on the industry? Where were we?
We went
Food
in a weird
processing.
way. You had an idea of how.
Yeah, my original idea with going with the same industry thing, but then we switched it to, oh, I remember, going with the cheapest. That I like that, I think. So to go with the cheapest, did we have a way to check? Didn't we have a
Oh
way to
yeah, that's
check
why.
here? Why did it go away? Didn't I have here?
You have to go to your, you have to go to your watch list,
Ah,
not here.
that's what it was, right? So I gotta add it there too. Fuck, how do I
Open this
find?
tab. Open this tab. Expand this tab.
Ah, okay,
Yeah.
okay. Then here, and now expand this, and now it's add
KE.
FNMC. No,
No FNMA.
FMNC.
No
No,
FNMA. FNMA
FNMA. Thank you. Wait,
and
no.
FNCC.
Why does it say
Yeah,
federal
that's it.
natural gas?
Mortgage. No, that's it, bro.
Mortgage ass?
Association, bro. Association.
Okay, the other one is FMCC, right?
Those things like Fannie Mae
Right,
are
right, you're
like
right. Those are like acronyms, right? Or something like that. What is it called? They're
like
not the
amazing.
real name. You're right. You're right. I'm just dumb. All right. So in here now, P FMCC minus 984p. Nice.
Nice.
RKLB Rocket Lab. Now we're going with the positive ones.
Yeah,
We skip
Comcast.
HRBK. Why did we skip? Because this was a pharmaceutical, right? This was at 0.
Yeah.
No, this is the
Yeah.
biopharmaceutical GMAP. So we went to Com, and now we are in CMCSA cable satellite. What is that? Comcast?
Comcast, yeah.
Let's run it. I like that.
Yep.
A media company at 5p.
It's gotta be wrong, but yeah. Let's do
Okay.
it.
CMCSA. Kami. Okay.
Let's read the Morningstar equity report.
Oh, okay. Can I? The hell?
Yes. It opens a different tab.
Am I blocking the tab?
I don't know.
Oh, there we go. Now it's gonna open like 100 times or some shit.
Mm-hmm.
Fair value of, what is that? Up 50%?
Or as of 30 of October
Jeez.
2025.
Why is it running so low? Are these the owners of Paramount?
No, Paramount's its own company.
Ah, okay. So do these people have any streaming?
Yeah, I think they have like Peacock.
Oh, so okay, so CNBC, NBC, all that is Comcast.
Yeah, and Peacock.
On Peacock, right? Yeah. Anything that has
Oh.
those colors.
I
Disappointing
hate
broadband pricing commentary, but shares are very cheap.
Mm-hmm.
I love it. Michael Hodel. It's essentially taking the same. Okay, before any of the specific quarter stuff. Platform to easily meet customers' growing bandwidth demands. It should allow for relatively stable market share and ensuring the recurring revenue and cash flow remains. So these people also sell internet. When they say bandwidth, are they talking about
Yeah.
cable? Oh.
Yeah, they're everything.
Oh. Verizon is also fairly like, right? Am I reading this wrong? No, yeah.
Yeah.
Undervalued too. Disney. Why is Disney a competitor here? Oh, because of the Peacock thing? Anyway.
Yeah. They're diversified across many different business lines.
Dense fixed line networks provide companies with the opportunity to push deeper into the business services.
Was that just fiber optic? Or oh no, they're saying like hypothetical. Okay.
Okay.
Like dense is like a yeah. I thought they were talking about like actual lines.
Oh, like the technology of the line. Okay.
Yeah.
The network is dense, not the line. Okay.
Yeah.
Few
It's
companies.
like it's like a metaphor, you know?
Yeah. Sort.
The word dense.
Sort of. I don't know if your English teacher would agree with that, but I see what you
I'm
mean.
using the wrong. Yeah, I'm using the wrong.
Few companies have as many ways to monetize content investments. With this direct access to consumers across the US and Europe, Comcast They're also in Europe. Should be a destination for the best writers. Oh, they're talking about the show part. What are you
I
talking
think what
about?
they're saying is that like because they get into households through their internet, they can
Hmm.
like sell them all their other stuff.
I don't know. Focus. Oh, this is the Bears are heavily exposed to traditional television. As more customers turn to online alternatives, the firm will struggle to post any revenue growth in either of its two primary segments, the US cable and media business. Those are the primary segments, though. So even though they have internet with the bandwidth, they're still coming mainly from cable and TV. Well, media,
Yeah.
right? Which would be right. I don't know.
Yeah, nobody really uses Xfinity. That's like their internet.
Ah, okay. Comcast's
Fios dominates pretty much, especially I mean in the US, Fios just dominates, I think. And Spectrum. I don't know, is Spectrum them? I don't know. I think Xfinity is them,
what is
but I'm not
Spectrum?
sure.
Spectrum isn't it AT&T? I think.
I don't know.
Jeez. Oh, great. What the hell is this? Charter Communications. Okay, so they're their own thing. Yeah. Okay. I don't know what Charter Communications is.
Charter Communications is a different company, yeah.
Yeah, okay. So yeah, Spectrum is owned by neither of them.
Oh, Charter, okay.
Uh
Charter was also really cheap at some point. I remember I had looked at the stock like a couple of years ago or something.
uh-huh. Yeah, I also want to check the valuation on Verizon now to see where they're
These
at. But
companies stink, bro.
you said what?
These companies stink.
All of them? Or
Yeah.
okay, so why are we looking at them? This guy. I
You
mean,
know, my issue is that like they have such like their fixed capital and their what's the word I'm looking for? Like their infrastructure demands are so high, dude. Like,
but I
do you
thought
know how much
once you
infrastructure these
built it,
companies have? No, you need to maintain it.
well, right. But
Natural
it's not much.
disaster destroys their stuff like all the time.
I mean, these people are paying. I want to check Verizon too in a second. We'll compare them like they do here. But if their dividend's stable, like let's see this guy's here. Like, look, I don't know, man. It's not eating at their cash that much that they are growing their dividend.
Yeah, they're managed properly.
Let's
But
see their
look at their
cash
financials.
flows.
Yeah.
Yeah. Oh yeah, this button here. Okay, deferred taxes. Well, okay, so this cash from operations is fairly stable.
Yeah.
Total cash from
Cash from
investing, capital
their
expenditure.
depreciation costs are insane, and their capex is also insane
Yeah, so they gotta spend about $15 billion a year in
to
maintaining their
maintain their
infra.
current infrastructure. Yeah.
That's taking aside or putting aside any media investments, which would also be here. So that's
Yeah.
why I want to see Verizon, because this will be a pure play
This is
communications.
V. This is
Oh,
V.
no, that's
Oh wait, no,
Visa.
sorry. It's what is it actually? I don't know.
Visi.
Oh,
Visi.
this is-
Elevisi. No, not options. Oh, first let me check the dividends. Yeah, okay, they're growing slower, but they have never cut it, whereas the other ones did cut it. Anyway, also probably anyway, never mind. They probably grow. I don't know why are these people growing their dividend like that. Anyway,
because they're stinky.
these stinky. Okay, again, yeah, stable cash from operations.
Coming down every year.
And then capex actually kind of coming down, but still way
You
larger.
look at that and say that that's stable.
No,
The cash
this is stable is what I mean. Oh,
it's
but
not.
I mean, no,
It's
it's
not at
not.
all, dude.
I
It's
mean,
continuously
it's
declining.
stable, but at a slow clip, it's declining. It's like,
Yeah.
but yeah, you're
It's
right.
not what you
I
want to
mean, they went up here
Wow.
by 300
It was
million.
genuinely an accounting anomaly, I'd say. It's just something was
I mean, it's a stable. I
pretty
mean, no, this is more like on average.
horrendous, bro.
But what did they do here? 5G must have been. Oh,
Something, yeah.
acquisition of
That's
business. No, but it's
no. It's
yeah,
just
yeah,
like a year.
intangibles. No, but this is a
Yeah.
different. Yeah, this must be a whole. Wait, does this go? Is this accumulative of this? No. But then why is
Mm-mm.
this 67? It must be accumulative then. But then why is this 4? The fuck? And sale of
Oh yeah,
business
yeah. Purchase and acquisition of intangibles
goes
is part of
inside.
capital.
Okay, okay.
Yeah, it's part of capital.
All right, so they bought something there. Okay. Right, right. So beyond that, yeah, they have about 20 something. Yeah, so it's always kind of about the same percentage. Yeah, so that must be the maintenance. 28 to 15. What is that?
Horror, man, horror.
Okay, okay, but you keep saying horror. Like, why? Why say horror that this is the line of
So
business in
capital
which.
intensive.
So what? What's wrong with that? As long as the business is run, keeping that in mind, it's 50% of the cash from operations goes. 55% goes into maintenance for
Every
these
time they want
guys.
to grow their business,
Right.
they have to invest a lot of money. That's why it stinks.
Ah, I see what you're saying, right? To reach new customers, 65% for these guys. Yeah, right. So even here, right, 50%. Yes, but they
It's
just spend.
stinks.
But it's is
That's why they're
that stinky
constantly.
though?
But their whole business model is like a constant scam model in which like between the five major players that offer this kind of service, they just scam each other constantly. They try to onboard new customers at like low rates, and then over time they just scam you by charging you more and more until you go and switch back to another guy. Every year, all the commercials are the same thing. It's like, come switch to Verizon, and we'll give you fucking 10 new phones, and we'll match the rates. And then over time, they just go up and up until another company comes along and puts a commercial where like, oh, switch from that company back to us, and we'll give you 5 free phones, and we'll give you a lower rate. And
But
then that rate
wouldn't.
goes up and up.
Mhm.
It's just like a constant scam cycle of like they onboard you cheaply at a loss, and then they just upcharge you constantly until you switch again, and it's just a vicious cycle, you know.
I don't quite.
To me,
Yeah, I see. I
because
mean,
what kind of growth? How does this company grow? How do telephone companies grow? It's like they just
like how do
grow
they
with the
acquire
population.
customers? But
Yeah,
cannot
they
they?
just
Yeah, I
acquire them
guess
from
what do
each
they
other.
provide that's better? It's all marketing, right?
It's all the same shit. Yeah, what they
Yeah.
what they provide that's better is a scam. They offer welcome offers that are like, come here, we'll give you free phones, which obviously they take a loss. That's like their customer acquisition cost is giving you free phones. They offer you a better rate, and
Right.
then that rate just goes up over time.
Yeah, so
Like,
they kind of yeah, but again, I mean, what you call a scam is they seem similar to me when you explain it to a bank, in which is like it's kind of like a psychological sticky thing, in which is like once they get you in there, it's like you're not gonna really switch it unless somebody does a really heavy marketing on you, like they do,
yeah, no,
right?
you do switch it. Like the prudent telephone user
Right.
is just
Yes.
switching every 2 years because once your contract expires, it's a 12. They're all 12-month contracts.
All
Once they
right.
expire, they raise the rate, and then there's always welcome offers from other companies where they're like, switch to Verizon and we'll offer you 3 new Samsung Galaxies plus a lower rate, you know?
Yeah, but it's all comparative in the sense, right? Like somebody like whoever is not winning the market, then they cut their like they cut the price below the
Yeah,
competitor,
yeah.
but that's not below a year ago, right?
It's a circle of scamming essentially.
But you keep calling it scamming. That's the thing that
They
I'm like,
all
no,
they
it's
all
not.
they're all one
It's
big
not a
company
scam
and they
because
all
it seems a commoditized
move it
market in which
on.
price action is the driver of market. In which it's like whenever it gets to a point in which the customer has to go buy the same thing again, a company takes advantage. Like I can offer it cheaper than a competitor, but that doesn't mean the customer is not spending more each year. It's just always kind of taking advantage of a commoditized market. So it's like when you say scam, I don't get it.
It's a
Like
scam.
it's not a scam because they're capturing a customer on a
It's a
contract.
scam.
It's called sales,
They're
bro. I mean, I
they're
agree that
capturing
it's
they're capturing the
scammy, all
same
sales,
customer,
but
dude.
hmm?
There, it's like a water circling a drain with 3 distinct points in it, right? It's like the customers are the same people every
Uh-huh.
year. They just move around. One year, Verizon will have 10 billion less customers than AT&T, and then the next year they'll have 10 billion more than AT&T. All those people are the same. There's no new customers. They're all the same people. Like the new customers are only
Yeah,
people that
sure.
are freshly 18 or whatever. They get a phone. I guess these days it'll be like 12, but it's the
Okay.
same shit there because it's an oligopoly. Like there's only 5 players
But
really,
again, what
and then
I'm trying to
even
sorry.
No, they just nothing. I just, you know what I mean, it just sucks, bro. It's a sucky business model, and
I don't get that
it's
the
like
sucky. It
fully
just seems
tied
to
to
me
the
like
market.
that's what happens to an utility. It's they're a utility to some extent. Like everybody needs
Yeah,
internet. They have the infrastructure to provide that internet, and then people will
yeah,
switch because of price action. But their
yeah.
driver of revenue growth is the fact that they can raise prices every year. Because even if they lose customers,
There's no revenue growth, is
yeah,
what I'm saying.
they'll catch them in the 3 years
There's
coming, or
only
they'll capture.
revenue movement. Like,
There is
and you're
revenue.
literally like the numbers are face front on the screen right now. There is no revenue growth.
I mean, this is growing.
No, it's not. It's stable.
Yeah, it is stable. You're
It's
right.
literally, it's
It peaked
literally
and then went down.
they,
But then
they
and then
lose.
went up.
Yeah,
Yeah.
AT&T steals customers and then gives them back in the next year. That's what it is.
So why the fuck are they raising their dividend every time? How do they do that?
They grow essentially with the growth of the economy. Like they
But they're
charge
not. Like in terms of the
average.
capital they have. Like we just right, that's what I was thinking, and then you told me if that was the case, then the revenue would grow, right? But it's not. So where are they
It's
getting the money to
we're not
raise their dividend?
looking at a long enough time span. It's like if you look
Mm,
at 10 years, they are growing. You know,
okay. So
you just
then
gotta look
back
at
to my
4 years,
point. So then it's not a
pretty much.
sucky business. It's
No,
just
it's like a you just capture the growth of the economy.
yeah, but I still don't get it though. How are they
So,
for the past 5 years? I'll check Comcast, but Comcast is because of the
so
media thing confuses me. But because these people are is this
stink.
anyway, they kind of are. I'm just saying to justify these people have been growing their dividend by 2% every year for the past 5, which is what I have available here. Which I guess I can check on ROIC for the past 10. So why are they doing that on an income that is not really doing much?
Because it's their dividend is probably like a very small percentage of this, and so they just keep the dividend grows in comparison to their net income
That's not a small
until
amount. Look at
there's
this. That's
yeah
11
yeah but
billion.
again it's like a utility, bro. Like they have no need for reinvestment because they already the market is what it is. Like they don't need to grow into a new.
Well, I think you just said earlier, and I mean, we saw it, that they do reinvest a lot of maintenance of their infrastructure. So why?
Yeah, but that's not growth main. That's not growth capex. That's literally just
Right,
maintenance capex
fair. But what I'm saying is that it's like if they have to make, if they have to spend 50% of their operating cash on capex,
on
what are
dividend.
they doing
Oh,
given a higher? No, what are they doing given a higher dividend no matter what? So what I'm thinking more is they're doing the
If
same thing they do to their
you're looking at
customers
income.
to
No, no, no.
shareholders.
You're
What?
looking at
Okay.
capex is
I know, but
offset
we
is
checked that earlier. We like I'm not talking about what I'm seeing here.
no,
I'm talking about what we saw earlier with this like where is it? Well, that's
their
also I guess
cash
we
flow
have it
is
there
much
too. But
healthier. Look, like the cash flow is much healthier because depreciation is a big chunk, and then that's why their capex is pretty much matching depreciation every year,
I don't know about
right?
healthy. But
It's not
well,
healthy
this is
yet, but
acquisition
I'm trying
year.
to tell
This is
you
acquisition year.
what
So
I'm no, no, but like what I'm trying to tell you is that their income being like their dividend being only like 60% of their income, being as much as 60% of their income, sorry, is not a real thing because it's like the real metric should be their dividend to their cash flow
yeah, okay. So look at that dividend, right?
plus capex is still less than cash flow. You get it?
Well,
So they still
not
have money
some
left over every
years.
year.
Well, I guess because
Mm-mm.
you're saying there's other things. Never mind,
Yeah,
never mind, never mind, never mind. But
the major
so,
figures are those, right? Essentially that's what keeps them running. It's like
it is a
it's construction.
shitty business to be
Yes,
I mean, in the
yes.
sense of like, but I don't.
It's just like a bond. Owning this is essentially just like a bond.
Yeah,
Like
but
that's
if
why this
it's
is
a
like these types of companies are the dividend investors that go
right,
to. It's the bread
I
and
was
butter.
gonna
Is that
say that right. Like I would own these people have a 6% dividend yield on a growing dividend every year, right? So that's what I was saying. Like I guess their shareholders are customer in that respect, in which is like, yeah, they
they're
do
just a
gotta
bond.
grow the
They're a
dividend
bond.
because people go to their stock for the dividend and nothing else, which is why their PE is low because nobody's expecting any growth. So it doesn't like it's never gonna get out of
Yeah,
that PE because people that
yeah.
are investing in Verizon they're investing for the dividend.
You just do it for the yield. Which, by the way, it's. I mean,
It's a
dude,
good deal.
I'll
It's a
tell you
good
right
deal.
now. I've
6? Oh,
I've
okay.
been doing I've
8?
been in
No,
financial
6.
markets for I think we're coming on 8 years now, right?
Yeah.
And I swear to God, the price of Verizon has not changed materially in any way. It's got like I swear it's been like 45 for fucking 8 years, bro. Like go to the chart. Like I swear it's like maybe 60 is the max. Like look at how tight this range is. Like
Yeah.
it's just like 30 to 50 for however many years. You can go even more and it'll be the same shit.
Yeah. But I want, and then, but then, yeah.
Yeah, I'm telling you, it's
Yeah,
just
I
it's a
guess it's a
bond.
question of, right. It's a question if I want to own dividend yield.
It's a good little bond because like 6% is
Yeah.
great. You know,
Yeah,
is
it's
that what
like
they're?
Altria or something like that, right? Which is like, I
Yeah,
mean, Altria is a little bit riskier, but I guess it has become kind of commoditized. Everybody smokes.
yeah. Altria is the same
Yeah.
shit.
Yeah. Just so I guess
Altria.
that's kind of the shape of a company, like when it gets to a mature point, is that they
Mhm.
care more about maintaining a growing dividend than growing
Yeah.
customer base because there's no customers to grow. You can only
There is
steal.
no growth. Yeah, they're just the market. They've captured the entirety of the
Yeah.
market. And
Smokers
therefore,
are the
like,
number that they are, or they will diminish. Internet holders
yeah.
or cable holders are the same they are, or they will diminish. Huh.
Mhm. People will die and people will be born, and that's
Now the
you know.
question is this a worthy investment on the basis of a dividend yield? Like, I just
Yeah,
have this in my stock portfolio, but I don't think no,
yeah.
because we're trying to be
You
very
can do it.
concentrated, right? So it would be good for, yeah,
Yeah.
overall, but for our portfolio purpose, it doesn't make sense to have either Verizon, obviously, or well, obviously, I mean, I don't know, either
No,
Verizon or Comcast. Because I mean,
no, no,
Comcast
no,
maybe
no.
because of the
You can
media.
figure out if it's cheap. If you just do a dividend discount model, you can figure out if it's cheap, and you can just buy it.
Ah, well,
That's all.
but we go back to
Well,
this that I think we've talked about this in the past of like if everybody's doing the same type of in the sense like
yeah, there's no edge. There's no edge.
yeah, I mean, also like we
Yeah,
say it's cheap because like we do a discounted dividend yield or whatever, discounted dividend model,
yeah.
uh, and it's like everybody else knows that, so they
No,
still won't buy
that's
it.
that's
No.
we know. Listen, we know what everybody else knows, in that we know exactly what growth rate to use, and then we have the dividend, obviously.
Right.
What edge we have, it might not be a real edge, obviously, is what discount rate we use, which would be like fine tuning our risk assessment on the US. That's the part that
Yeah, the discount
is
rate. Yeah, that is the tweaker, but
yeah. We don't have that though. I'm telling you right now.
we don't have the
We
tweaker.
don't, we don't have that because we don't know. We can't figure out like. I mean, yeah, it's too hard. Like the whole thing about discount rate is
Yeah, yeah,
you're
that really
measuring
is the key,
corporations of
right?
the nation, and these companies that pay billions of dollars every year probably do it better than us. To be honest, I mean, we should just use whatever they do because they know better than we do.
Yeah, that's
Honestly,
interesting.
Oswald the Motorin
Yeah,
is
yeah, he's
that is that guy.
a
Is
good,
that guy?
a good arbiter.
Whatever he says, that's what we should use. Genuinely,
Right.
like they started including his CRP equation in the CFA materials. They didn't
You
test it, but it was in the materials.
you told me something about that, but can you remind me what the CRP was? Equation?
Credit risk premium. What
Ah.
the equation is, I don't
No, no,
know.
no, not the
I think it's
equation,
like
but what it like what yeah, what that was your credit risk premium as in like how to value credit? Damn, I have a
no,
terrible memory for
the
some things.
it's just the it's essentially like the discount rate for equities in a
Ah.
given nation.
Oh, I remember. Yeah, we were looking at the map, like how to assess like geopolitical risk or economical risk, right?
Yeah,
Something like that, like how to give it a number, right? So
yeah.
that you can adjust your investments in those
And I think
sectors.
his equation is literally just bond yield plus
Don't I have it somewhere here?
inflation or something like that. Something, a combination of those things. You can look it up. It's like a fully like he wrote a paper, and I think he prize in economics, and I think now it's just like a stand.
Noble? I mean,
I don't know
yeah,
Nobel,
okay, okay.
but like if you
Uh,
look it up, like type the Motorin's CRP equation on Google. it'll bounce something to you.
Okay. This is what we're looking at, right? But I don't know if this shows the equation.
No, this is just his calculation for the year.
CRP, ERP, right. All right, right. So yeah, so this is the difference. Right? CRP will be for buying debt, ERP for buying equity, right? Risk premium depending on the country, and then the equation. All right, let's see. I want to see the ERP to be honest. Damodaran ERP equation. Expected market return. Okay, no shit, but
yeah, no, that's what it is.
okay, it's nothing special though. I guess it's how he calculates it for the country. There must be something else. Expected market return is, I guess, what he does.
Well, you can break it down. Expected market return is, we have an equation for that too. We have a few equations for it, actually. It's just inflation plus expected inflation plus GDP growth plus change in dividend yield minus the change in the PE, expected change in the PE.
Country. Oh, so it's not. Oh, so it is what you were saying. It's country. Not.
Yeah,
I mean, like it's not credit. It's kind of. And then he adds it. ERP will be like above it always, right? Where the hell did I put the picture? Did I closer over?
No, sometimes not. Sometimes not. If actually, wait. Sometimes not.
It has to be, right? Because the country, like ERP, will be like added, like market risk plus country risk.
Yeah.
Right. Yeah. Yeah, it has to be above every time. Yeah.
I was just thinking that if.
Damn, Stone is low.
Makes sense. Greece is low.
Greece? All right. And I guess they had to be adjusted because I feel like Greece must be lower even now. It's been doing really good with the new president.
Yeah, well, not that low.
Ireland.
Ahead of ourselves.
Okay. Where is Spain? Probably fucked. Where are we? Oh, all right. Better than Greece.
No, yeah, better than Greece. Yeah.
Anyway, we'll choose a second or just check a different thing.
Yeah, like you can figure out. Go back to this equation or whatever.
Yeah, right.
Like this all breaks down. So, wait, what did you do here?
Oh, I was CRP. I was checking CRP now, but I can go back to ERP.
Right, but this also is like.
Oh, but this, yeah, this is the way to get to the discount rate. Required return is risk-free rate.
No, go to ERP. Go to ERP.
Okay.
This is like stupid.
No, but that was the way you were saying. How do we get to the discount rate? It will be through that.
No,
this is a premium.
Expected market return equation is different. It's like it's inflation plus GDP growth plus dividend yield of capital markets plus expected change in the PE ratio of all stocks of the index. You know, like just type equity. Go back up. Type equity market. Wait. Hold on. Get out of here real quick. It's blocking the thing.
I'll leave the room now. No, bro, what do you mean? I'm confused. What
expected market return equation.
Okay.
That one. Expected market return equation. No, not the Motorin, but yeah, it's fine.
Oh, you just want... Okay.
Yeah, it's not the Motorin's thing. That's just like a more broad thing. CAPM, yeah, there you go.
Yeah, but the CAPM is a...
Like you see, so it's...
Yeah. No, but that's what I'm saying. He does a modification of this involved in CRP.
Right, but this is not the only way. There's another way that I like more.
Okay.
I forgot the name of it. So just get rid of the Motorin.
Okay. Expected market return. You don't like this. You don't like CAPM, right? There's another one, right?
I don't mind it, but it just seems too simple for me. I don't know. I mean, it's probably the best shit, but
asset pricing model, maybe, is that it? Capital. No, that's CAPM again, bro. I'm fucking weighted average method. Expected return of different portfolio, probability of return.
Yeah, there we go. Bogle.
Where? Bogle. Where are you?
Bogle model. Not at the bottom.
Oh, here. Starting dividend yield plus earnings growth rate, change in PE multiples.
No, there's an even bigger one, dude. There's an even.
Is it? I think it's. You're talking from the CFA, right? Is it one that is like accounts for the expansion of the of the multiples or not?
Yeah, but this one already does that too.
Mm.
This one breaks down growth rate into separate components, which are like inflation plus expected inflation plus change in GDP growth.
Yeah. I think it's starting to ring bells, but again,
You know
my
what I'm
memory,
saying?
you know how it is.
That's the one that I think is like the most like if you want to do it yourself to see if it matches up, that's the one you got to use because in these other ones you kind of have to rely on like other people's calculation of things like beta and of the like you know what I'm saying like stuff like that risk-free return and all this shit.
Yeah, they're not really gonna tell us here.
No, it's fine. It's fine. We
Pama
can move
French,
on.
maybe add fact. No, this other right. This
No, no, that's
factor. Yeah,
yeah. People love the Fama French. I
I
think is
like
the
the
most
Pama
accurate.
French. Yeah,
Mhm.
but I guess it's harder to figure out the factors though.
It's tough, yeah, because you the whole thing is like you could. I mean, there's definitely ways to break everything down, but most people just. I mean, especially the CFA is very like they just tell you. You
And
know,
it is
this
the
is kind of.
CAPM. It's like CAPM plus the factors, which is it's a yeah. You're just kind of
Fama
tweaking
French is just
CAPM.
an expanded CAPM,
Yeah,
pretty much. It's just a CAPM, but with more factors, like a small
yeah,
versus big, and then all that kind of stuff. Anyway, this
right,
is all like this. Yeah, this is all dumb. Anyway, what do we think about this now? So
right.
Verizon and Comcast and all these companies.
Again, I mean, I think well now that you explain it this way, I don't think Verizon fits our profile. Although it's a company that I'll look into maybe buying for my dad or some shit. But Comcast though. Comcast has more than that, and they do show revenue growth. Though it's it's nothing crazy,
Sort of, yeah.
but
Great margins.
very margins. Yeah, actually. Wow.
Gross margins.
Or even
Yeah.
operate. Oh, this is an expense. Okay.
No, 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 no.
No. Don't get it confused, buddy.
Yeah, gross margins are great, but like, look at this. Like, it's the same thing as everybody else. Like,
Yeah. Hmm.
and their depreciation back up. I didn't see. Yeah, 14 billion. Yeah, they're the same. It's all the same stuff, man. Like,
Yeah. I guess right. I wonder like if it's good for them to have that hybrid of show business and like
but again,
telecommunications
like, it's like one
infrastructure.
of these is that you can figure out the cheapest one and just buy that and be chilling. Like,
When
or
you mean the cheapest one out of what? Out of all communication companies or out of all show
yeah,
companies or
out of all communication companies, this is like a hybrid because it's not
yeah,
like this
that
is not
that
like
that is the thing that is if it was communications, I think we shouldn't get into them because they're just again like a utilities,
right. But
but they're
why is this
not.
company 5 PE? Is that's
Hmm.
what we saw in the beginning, right?
Yeah. Compared to like S 8.6 of Verizon, something like that, right? So they're
Yeah.
very low PE. They're even like close to book value. Below sale, I mean, I don't know. Yeah, below sales, right? Is
Go
that what it
to
means? Yeah,
their
that
income
belongs
statement.
below
Yeah.
sales. Wow.
Go back to their income statement. I mean, yeah, but it's not a software company. Go to a go. Okay, so income is 16 billion. Yeah, is the valuation just really depressed? Like, go look at the stock chart. Is it down a lot or something on the year? It
Yeah,
might be, right?
maybe we gotta go to AI at this point and ask like what is going on here in terms of news or some shit. I mean,
No,
it's
look,
definitely
it's just
depressed, but what's the like? Is it just a general depression or what is
what's
driving this? Is it
the
earnings?
what's
Like
the
miss?
no, it's probably just like the whole streaming thing is there's a big loss.
I mean, they keep
But
beating.
let me see. Yeah, they keep beating. Let me see the what's the market cap? We said like it's like 100 or something, 100 billion.
Oh yeah, 107. 107 billion on. I hate that
You can
it's
go to there's the quick one. Oh, okay, it's fine. You don't have to always expand that, but
fair enough. Fair
yeah,
enough.
it's fine.
Right. Okay. So yeah, but that's revenue, right? So then
100
income
billion on
on
18 billion of income.
23 of
Yeah, it's
operating.
about four. It's about four. It's like six.
Yeah, but even on average, yeah. I mean, that's stable. Apart from this, whatever the hell happened here.
No, look at their net income. Yeah, like it's not weird. Why do they have a bad year?
Yeah, we can find
What
that.
was the
Let's see.
cause of it?
I mean, that year specifically, yeah, they had more operating
More
expense,
expense, yeah.
which came from
Cost of revenue.
here, impair assets.
Yeah, they impaired a bunch of their probably like a bunch of their properties.
Yeah, like their IP.
Their IP, yeah. I mean,
Mm-hmm.
yeah. I
Initial
mean,
expense, right there it is. So then adjusted for initial expense, income normalizes to about 20 again.
yeah. I don't know if you should even adjust it because that feels like something that would happen every
Well,
once in
but
a
if you're
while.
not gonna adjust it, then smooth it out. You know what I'm saying? Then
Yeah.
distribute it.
Add it. Yeah, I think it distributed exactly. Yeah, that's
Yeah.
what I
So
would
then
say.
it goes back to the same thing, which is we do the average of all of this. We would put this back to 15 just to do the average, and then we get an average of 12, and we've evened it out in 5 years. You know what I'm
Yeah.
doing? Okay.
Yeah, I get it. I get it.
So on an average of 12 on a 100 billion, 107, yeah, 107 divided by 12 is yeah. What? I don't fucking know.
Like 10,
Yeah.
less than 10, 8.
Yeah, 9. Okay. So there are 9 normalized average earnings.
Yeah, pretty much the same as everybody else. It's just there's just no yeah.
I mean, let me do this average a little bit better. But yeah, I mean it's nothing. Yeah, it's nothing crazy. You're right. And what is the catalyst? But yeah, it would
Yeah,
be
it's a bond. It's
15.8.
just a bond, literally.
Okay, if it really is just that, then we're definitely not interested.
All right,
Let's see here.
let's move on.
15. Okay. Yeah, because it's like if we're really like trying to take it down to 5, which we are,
Yeah,
then what's
5
the
to 10.
point, you know?
I used to be a 3 to 5 kind of guy. Now I'm like a 5 to 10 kind of guy.
I mean, I redid the average and it's more like 14. So, but again, it's like what times 107? It's gonna be yeah,
Whatever.
7.7. Like the
Oh
average
no,
of.
I'm saying no. Oh, I thought we were talking about something else.
No, my bad. What do you say?
I thought we were talking about how many positions you want in your portfolio.
Oh yeah. Oh, you're saying 10 instead of 5?
I used to be like a 3 to 5. Now I'm a 5 to 10.
I mean, yeah. I feel analysts can cover 10. It's just more like why not do like I like. I mean, it's. But yeah, we're not gonna do that level of research, right? I guess to get to 5. Because we would need to really get deep. I guess, yeah, I mean, obviously the goal is to get to 10 first. And then if we feel the need to cut it, like
Yeah,
you
it's just
have to
like
be.
you start to realize. I
Uh,
mean, for me, it's like it's so simple these days. It's just like valuation with growth versus
right.
not
Yeah.
growth. So it's like there are companies that I own that like, and they're never the same. So it's like you can't just make a thing of like, oh, this company's 10, this company's 15, so I'll buy the one that's 10. It's like you should buy both if they have differing revenues and it makes sense. Like 15 with more
Mm.
revenue growth and 10 with less is the same, is in it's good enough to have a position in it. You know what I mean? It also just helps with diversification, which in the beginning I used to be like, who cares about that stuff? But the more time you're exposed to your own portfolio, you start to understand that like, damn, it is kind of nice to have things that work against each other in your portfolio.
But again, but I feel like that's kind of a coping thing. Because
It
it's
is.
like,
It is.
it's right, because it's nice because you don't see a dip and rise. But I just like
Yeah.
the idea of owning, you know what I'm saying? Like buying a
Yeah,
business
you
for the
can
sake of
full
owning the business, not for the sake
you
of
can
selling
full
it.
port. Yeah, you can full port like Lilu.
I
Just
mean,
full
one
port
is
it.
OD, but like the idea of like, if I can narrow it down to 10, and then I'm like, out of this 10, are there not 5 that are better than the other 5? Like, what am I committing
See,
to?
I'm trying to say that it's not. There's not five. Like
Yeah,
there's
there's
probably
different
more than
industries,
10.
right? That you're saying,
Yeah,
like,
there's
the
probably more
economy
than
is
10.
distributed, therefore my
Just
investments should be distributed.
yeah.
I
And
don't know.
again, like doesn't you don't have to think about it from you don't have to always think about it from the lens of diversification. Like maybe you
Yeah,
find
yeah.
10 software names that are all cheap for
Right, right,
different
right,
reasons.
right. They're just different
Right?
branches of the economy, right? Like kind of that. Is that what you're saying? Like they're not eating at each
No,
other, therefore why not own? No?
no. They're if you own 10 software names, no
No,
matter
right.
how well you research them and how cheap they are, you are fully concentrated in the
Right,
same
right,
company.
right. So do you defend that though? If you find 10 cheap software names to just get them all?
Yeah.
I don't
I
see
wouldn't. I
that.
wouldn't. If you told me that, if you said that, and you were like, "This is my edge," I would say like that's smart. Then I wouldn't say that you need
No.
diversification. competition.
But no, I
Yeah,
said you need less because if you own in 10 companies that are all cheap, but they're all in the same market, isn't it likely that one or two eat the other eight cheap ones? Because how can they all win?
yeah, but then you would still win. You just become more
Right.
concentrated.
Well, again, but then if it, I would win more if I own just two of the cheap ones because I could have
No,
more money on them.
no. If you're talking about a consolidation situation, then
Right, because they're gonna buy
no,
the other one and then
they're gonna buy the other
eventually
ones
they're gonna
and then
do it
defend
right, but they're
the
gonna
market.
yeah, okay, in that very specific case in which they do absorb them, sure. But I'm saying okay,
Yeah,
like
all
the other
that
ones
stuff is
lose.
you're saying if they lose,
Yeah, like I'm just saying if they're in the same industry and competing, if they're all
right? But
cheap,
then if you buy companies that lose, that's not what I said. You didn't do a good job. It's like I'm saying
I guess what I'm
if you
saying is
had an
how can
edge,
there be 10 winners in the same industry?
there can definitely be 10 winners. There could be like 100 winners
In the same
realistically.
industry that but wouldn't has
Yeah,
that what is that good example of that? Because usually it's one to two winners at the end of
oil.
the time. What?
Every industry
Oil is
has
it's a nifty one because it's a lot of government regulation, so there's a lot of protectionism.
railroads.
Railroads,
So
I mean, this who's the winner now? Amtrak, if
is
that's a winner, you know.
Amtrak is not a railroad.
What?
I mean,
Amtrak's
it
a
is, but like it's not like a railroads are like companies that transport materials. Amtrak, I think, is like just for people, like passengers.
anyway. I think railroads it's like government run at this
Canadian
point.
Railway and Pacific Railway are the big companies.
Okay,
But there's
so
more.
that's not 10.
No, but there's more. Just because a company dominates a market doesn't mean that a company that's has a small piece of that same market can't do well over time. It just doesn't mean that.
But I'm just
It's not a
saying
winner take all situation. Like a
it's
small
not to
company that owns
take
a very small
all,
piece of the
but
market, as long as the
yeah,
market is growing, the company will grow. That's it. In the
sure.
same way that most industries work in that way, it's really unlikely that an entire industry becomes an oligopoly in which if you own 10 names, suddenly seven of them are dead. You know, it's like
Okay,
very rare.
okay. Again, yeah, maybe not that, but again, if two of them out of those 10 are gonna grow a lot, and then the other seven are gonna grow less or like much less, then
Uh,
having 70% of my money on the less growing ones and
no, the ones that
20%.
grow less might do better because they become more profitable with the less. They might grow less, but they become more profitable. They just cut
Shit,
costs. They become more efficient. Bigger companies might become less efficient in their growth. It just all depends. Like it really just all depends.
but
A
what is
small company could do
mm,
better. Like Domino's Pizza has outperformed McDonald's over the last, and Domino's is smaller than McDonald's, you know? Or like Tootsie Roll. Tootsie Roll is like a completely obsolete piece of like a candy that genuinely you only see during Halloween. It's like the stock has done better than Hershey's over time, you know?
okay, I see
It's
what you
just
mean.
good management. Good management plays a big role in how companies do. They don't have to have a big piece of the pie. They just have to be managed well, and then, you know,
Okay,
be more
okay.
efficient
I
in the
think I'm
delivery.
starting to see what you mean. If I'm buying a company at a really good price, it doesn't matter that it's the store in my town because I will triple, quadruple my investment, and that's really what matters, right? Okay.
If you do a good job picking,
Yeah, I don't
it's
have
all
to
up to you,
own.
really.
I don't have. Yeah, the most important thing is not to own the biggest seller of yeah, Tootsie Rolls or whatever, is owning a company at a good price. Because then I can buy, but I guess, yeah, you limit it in the size of things. I can only buy
Yeah.
so many small shops. So then I want to look for the big
If you're
one.
doing a good job at picking the right things at the right valuation, you'll make money, even if, you know, what you're saying plays out. Like if a company just dominates the space,
Yeah,
that company like equity returns could not match that, really.
right. That actually makes a lot of sense. And it goes in line with a lot like this book about Warren Buffett and like other like CEOs of first shareholder value that I read. And there was a lot of interesting points. And one of them was the idea that Warren Buffett always analyzes any purchase, not just stocks, like for example, machinery for a business, a new car, whatever decision that is capital related, on the basis of
Mhm.
whether it provides a good return. Like it does discount the cash flow some other way, and it's like, is the purchase
Yeah.
of this today gonna provide me,
Yeah.
attractive
We
returns?
literally do that during we do that kind of bullshit during the CFA. We like we
Right.
do in the internal investment decisions for
Yeah,
companies, like
right.
if a
Financial
piece of
planning.
equipment is gonna, yeah,
Uh,
if a if a piece of equipment that the company buys is worth it versus a different piece of equipment that has like a smaller, like a, is it better to buy this piece that will be useful for 10 years at this price, or this piece that will be useful for 5 years at this price, and then you make the decision based on what gives you a
hmm.
better return.
I guess okay. One counterpoint to that, because then there's the fact that like markets are not driven just by the quality of the companies, but also by the kind of like I guess would it be popularity? Is that am I going wrong with this in the idea of like if I own the bigger name, the stock price will rise far more, like the multiple expansion and such, compared to owning the other company that yes, it's turning
Mm,
kind of the same
over the
revenue
short
growth.
term,
Yeah.
you're describing like that famous quote where it's like, in the short term, yeah,
Yeah.
because in the short term markets are like a voting machine, but in the long term they're a weighing machine. So
Yeah,
it
but
would all
I
equalize in the end.
mm, uh, but I guess what I'm pointing at too kind of is if the large winner, right, like the Coke versus a smaller soda company,
Hmm.
it's growing their revenues
Smaller,
exponentially. Their market cap has to catch up with these huge revenues, right? So then,
no,
hmm,
not necessarily,
no,
because it's not the revenues that dictate valuation, it's the earnings. So if a company is
okay,
growing the revenues more, right, they might be, if they're a good company, they're growing their revenues more than they're growing their expenses, right?
okay,
That would make earnings grow.
okay,
Sometimes
fair.
that's not the case.
Okay, okay, but
And so,
okay. So let's say earnings. I'm just saying the idea of the scale of a business driving the share price, not just the efficiency or good management. Like if a business is ever small, but they continue to expand margins and stuff, it just won't drive as much capital to go into it, right? Because I guess like, what do you do with the capital if you're not growing, you're not increasing scale, and then the moment you,
you're cannibalizing your shares, which makes the price go up. Dude, like I'm telling you, you don't need to grow to have stellar stock returns. You could be a $4 billion company and your
mm,
stock could quadruple if you remain a $4 billion company, just because you manage your earnings properly and you cannibalize your shares. That's
bro,
all it is.
yeah, you're making again another point from the book, which is that many CEOs that were really good for shareholder value were ones that, when they didn't see an opportunity to grow within a market, they returned capital to investors either in the way of share buybacks or dividends.
Yeah.
Right.
You
Yeah.
do it in a way, if you're smart and you want like good optics, it's like you do it because just giving distributions to shareholders through cash
Right.
is, I think it's stupid, because you're like
Right.
you're taking the money
And
out
it's
of the
a
business.
tax event. Yeah.
Yeah, it's like, why not just
This is
have
also
less
in the book,
outstanding
bro.
shares?
Yeah, you're so. I mean, yeah. I mean, you're making great points. I see it. I guess I still find something there that is not clicking on the level of size, but I mean none of the things that you're saying seem wrong to me. So I don't know what to
Yeah.
do with it. So,
I
but
mean,
yeah.
the right now it's hard to see if you have in mind like Mag 7. If you look at Mag 7, you'd be like, obviously the greatest growers are going to grow and they're going to become huge, and then that's also going to provide insane investment returns, which is the case right now, right?
Okay.
The issue is that if you did that in the past, if you did that in 1998,
Hmm.
you lost money because they grew, they grew, they grew, and then eventually they became less profitable. And so even if they were continuing to grow, their multiples didn't contract. I mean, they didn't expand,
Mm,
and they didn't become more profitable per each unit of revenue acquired. They were becoming
mm,
less profitable. And so your investment returns with those companies suffered, even though you did own the fastest growing and biggest companies in the entire world. You know what I mean? And I think it's going to be the same. Like, it has to be the same, unfortunately, because that's just how life is. Like, these Mag 7 companies, if you buy them right now, you might get a good return in 2 years or 3 years or 5 years. In 10 years or 30 years, you're not going to get a great return unless they become companies that care a lot more about their efficiency. Like some companies do. Like Microsoft is a good
mm,
example. Like Microsoft is part of the old brigade, but they've adapted and they've
mm,
continued to manage their money well and have
mm.
become more profitable. So it's like a good mixture of both what you're saying and what I'm saying. I'm not saying, like, what I'm
Right.
saying is not. contrary to what you're saying, both can be true.
Right. No, right,
Company
right.
can grow
Scale is not
and
bad,
become
but
successful.
the crucial
Yeah,
part is management being efficient. And then scale can
management
be
being
there or
efficient.
not. Yeah.
Yeah, there could be
Mm.
opportunities everywhere, like in a small company or a big company, in a
Mm.
non-growth company or a high-growth company can have the same opportunities. And then that goes back to our original thing of like
Mm.
it's hard to know to really concentrate your portfolio because there's so many opportunities that are the same on the balance of like, do I want to own this thing or not? Unless you have a mandate. If you want to just own hyper growth, you just own hyper growth. Or if you have like if you have an edge somewhere,
Nah, yeah, yeah. I don't like the idea of having a mandate because I mean, yeah, but yeah, but then I guess it goes
yeah,
to the
I don't think
idea
you
of
should have a mandate either.
right, but the idea of having a limited amount of money, right? So it's like, what do we do if there's a lot of cheap stocks, whatever? I mean, we're obviously not gonna find that, but let's say that all of them are attractive purchases. We have 20 attractive purchases, and we have $10,000 to invest. Are you saying we buy them all equally? Like, how do you assess the amount of money to invest into each opportunity?
Uh, Portfolio management theory. Yeah, it's hard, bro. It's like a portfolio management, like the theory of like capital allocation is
Yeah.
tough, man. I don't know.
Right.
It's
So
really
that's
just
where
a
it goes back to
matter.
what you were saying of maybe it's better instead of trying to find the best and then the series kind of finding kind of counterbalances of like, okay, I found these 20 great deals, and now I kind of build the portfolio in a way that it
Yeah, you
counterbalances.
find 20 great deals, and then your capital allocation decisions, as much as like we just said that it doesn't really matter, like I think about it because it's like, why not? It's like, what if I have 20 great deals, right?
Yeah,
And five of them are semiconductors, right?
yeah.
I'll buy all of them,
Okay, so
but
then, okay,
don't
so
want to
then,
buy all of
okay.
them if the five start to represent, if the five out of the 20 represent more than 50% of my net worth. I think that it's like to counter myself or my own bias. I think it's better if I just keep them to a certain portion of my portfolio. You know what I
Mm,
mean? And again,
right.
that's not exact
I don't,
science.
yeah, I don't know about that. Like, or at least
Yeah,
I see more understand, or I find it like now I'm seeing why it would make sense to try to get to an intrinsic value or a valuation, because that way I can rank those 20 deals in order of how far from the intrinsic value are. So it's not
yeah,
like,
percentage.
right, it's not just
Yeah,
20 cheap stocks, it's how cheap each of them are respective to what I think they should be.
relative to the others. Yeah, but
No,
then
no, no.
sometimes it's
Relative to
like,
what I think their price should be, not relative to the others, but relative to like if I think this company should be trading at 40 and it's trading at 20, I should own more of it than a company trading at 30 that should trade at 35.
yeah, so relative to others.
Oh, okay, that's what you meant. I thought you meant like if it's 40 and the other one is 45, own the 40. But yeah, okay, yeah, okay, yeah, yeah,
No, like how much capital allocation in your own portfolio
yeah. Like put more on the ones that are further away from intrinsic
that are
value.
cheaper.
Yeah,
Yeah, exactly.
cheaper. Yeah, exactly. Yeah,
And
exactly.
it again, even that part is just it's so hard to figure
Oh
out
yeah,
because
yeah, exactly. It gets to that. I was like,
you're
how?
introducing a ton of like confirmation bias pretty much. It's like you don't really know. It's like that's just what you figured out now, but somebody else could be there and be like, yeah, I don't we don't get to the same number
Yeah,
and my intrinsic value is further away or closer or whatever it might be.
right.
It's
Which
a tough
also,
thing, bro.
yeah.
Tough thing.
No, I was gonna say like it also kind of makes sense why the people that don't like intrinsic value and move more into like multiples, like oh I'm gonna buy something on the basis of multiples compared to industry, right? It's like oh I'm gonna buy this company because they're trading at these multiples compared to an industry that is trading at a higher multiple, so that's relatively cheaper. But then it's like the only way to figure out which ones to buy is to do some type of modern portfolio theory of like balancing and counterbalancing different industries. Whereas if you focus on intrinsic value, you can just focus on which ones are further away from intrinsic value. And you can do that, like what you're saying, like have five companies in semiconductors because it wouldn't matter. Because if all of
It wouldn't
them,
matter.
right, if all of them are far away enough from their intrinsic value, which again is where one can fuck up, the same way one can fuck up in the assessment of multiples. All right.
Yeah. Yep.
I feel like I'm getting very esoteric for no reason,
And
but yeah.
and again, like as much as we say that diversification doesn't matter, does in that respect because
Huh.
you can be exactly correct, right? And you can find 5 semiconductor companies
Okay.
that are all better valued than all other companies in all other industries. But the issue is that over periods of time, those companies could get even more undervalued because they're all concentrated in the same risk, right? Like, what's the like irrationally, like the valuation can become even more irrational, which would hurt you. Like, obviously, if you don't care, like, if you're not thinking about your portfolio on a year-to-year basis, but rather in like the long term, it wouldn't matter, right?
Okay.
Obviously, because again, in your head, you're like, I don't care if they're all concentrated in the same risk, and I don't care that they're all like losing. They lost 30% this year or 40% because of some kind of external issue that's specific to the industry. Because I know that I bought them cheap, and I know that that issue is not affecting them. It's just like it's a thing of like the industry itself. But
Hmm.
over the short term, it is nice to diversify because you have, things that carry your portfolio through that. And that's like if I think it's more important to diversify if you are using your portfolio actively to like finance your life, like to finance your lifestyle essentially. If you're just investing for
Right.
the long term, you don't really care. Obviously, you
Right.
care if the thing is intrinsic, in which you did a valuation,
Right. Right.
right?
Right. You're like the business has changed. The
The business has
environment has
changed.
changed.
Different story. Yeah. Then it's like kind of like you just fucked up, or it's just something that you couldn't have figured out, and it just
Right.
happened.
Uh-huh.
Um.
Yeah, and it's all kind of clicking things that I already know, but kind of the re-click of that. It's like at that point, all you care about is the entry point of like that whole thing of like this ball's being thrown, and all you care about is like you don't have to bat at all of them, but when you do, and that plays out, and then you just let it play out, right? It's like if I don't have to worry about okay taking cash out because I gotta live out of it, or if I don't have a mandate, or even shareholders that might take their money out, or whatever fund, whatever, you know what I'm saying? Then all that matters is buying companies at a good price and then just holding them until the business changes.
Until the business changes, yeah.
Or and this is the other thing that I feel like you've mentioned in the past, and I think this is definitely there's a lot of reasoning behind it, but I don't know if I share it but the idea of like what if it gets super overpriced? So the business hasn't changed, but market perception is so out of whack that I should sell
Yeah.
so I have available capital.
That's a tough one for real.
Right.
That's a tough one because it's
Yeah.
like it really depends. Like,
Right.
do you sell to invest in better opportunities?
Hmm.
Do you keep it and then loan against it if you need cash to go for better opportunities, or like what do you do? Yeah, I haven't figured that one out yet, to be honest with you.
Which is why it's beautiful to have some type of other income, because that way you can always have available capital to invest in new opportunities
Yes,
without
but
having to sell old ones.
hmm yeah,
Ah,
100%.
so still
You can
gotta
just
make the
keep building
hotcakes. Yeah.
equity. Yeah, you can just that's the thing of like, bro, like every successful investor has to have like a operational business.
Right. Insurance, like the good Buffett,
Just
right?
like Warren Buffett. Yeah, exactly, bro.
Yeah, you're right. You always have to have available capital, so you don't have to
Mm-hmm.
sell to buy. Boom.
Yep. Boom.
All
Or
right.
you just sell and then you just,
Yeah, yeah. I mean,
whatever.
it's fine, but it is good to not be feeling like to not miss out on an opportunity, you gotta give up another one.
Yeah.
But,
Yeah.
but again, but yeah, but no, yeah, I mean that makes sense. The only reason to sell would be if the business has changed or your
Yeah.
idea of it, and if
If
you're selling
valuation
for any
runs
other
away,
reason, the system is somewhere
valuation. I
flawed.
mean, realistically, you should. The whole thing of value investing is that you should just buy something when it's cheap and sell it when it's expensive. There should be an exit point. Now, the difference between that and
Hmm.
just
Hmm.
general investing is that you should just keep everything forever. Just keep building your
Right.
equity.
Yeah, yeah, yeah. Okay, okay. That's a good. That's yeah. I was talking about that with my father recently because he has this like the money in the fund, like it's like a value fund. It's like I was like these people are traders. They're just very long term traders and they're value traders. They try to find a really good deal because they eventually want to sell it. But I'm like, but you could own stocks for the purpose of just owning a part of a large business, the same way you buy a shop or you buy an apartment to rent out
Yeah.
and to pass on to children. Yeah, like that's real investment to some extent, or real in
But
whatever
that
that
part for
means.
me is like is that's the part where like it just makes more sense to just own an index because over
Hmm.
like many decades. It's just like you're never gonna lose. You're
Hmm.
just gonna keep winning as long as there's not like nuclear fallout, you know?
Right.
Because obviously, like, bro, you can figure out like, let's say you buy something that you think will be around for 50 years. It probably won't be around for 100 years, unless. And that's kind of why now I'm like so into food because it's like, bro, if you were taking this view of like, okay,
Mm.
I want to buy an asset and never sell it, you would never buy technology because technology will always get replaced by better technology. Whereas there's some businesses that will never get replaced. That's why Altria is so interesting,
Yeah.
or
Yeah.
like
Yeah.
food companies like McDonald's or whatever it might be. But
Yeah.
you can skip that whole part and just buy it, the whole market, realistically.
Right. I guess now I'm thinking of the fact that it's like then the better way to go about it is not even like only buy stocks if you don't have other options. Like if I can buy a small business at a good price, like I guess it's because it's
Yeah,
harder to
that's the tough thing.
analyze and to
No,
find.
it's better, yeah. If you're small business could provide better returns over the
Yeah.
long term
Right. I guess
because
what
you're
I mean is the
responsible for
analysis
its
of it. Like,
growth.
is there
That's
enough
why.
available data? I guess it's like more. It's more obscure, right? It's a more obscure, but that gives you the advantage. Right? If you go and try to find them, nobody is much harder for anybody else to be looking. Then you buy a business at a low price. Because even Buffett,
Listen,
I
the whole
think
thing
he
of
was saying like,
going on
okay,
is
sorry.
impossible. The whole thing of figuring out how long a company can last is genuinely impossible, bro. I think it's like, how do you even do that?
Yeah, but then you have like the concept of margin of safety, right? It's like, well, right? It's like I think they might last 10, but I'm gonna buy it as if they're gonna last 2. Like, what I'm saying? I buy it so cheap that if it lasts less,
I
way
suppose,
less.
yeah. I suppose, yeah.
Yeah, like
It's
just
tough,
find
man. You gotta make
cheap
a decision at some
companies.
point. It's
Yeah,
like
no, I know.
you're always
It's
gonna
always a
have to make a
risk.
decision. Yeah.
Right. Right.
It's a tough thing, and then when you get to that point, that's like when it's the toughest because you're like, what do I do?
Yeah. That you just gotta fucking sweat it. You just gotta
You gotta
fucking
sort it
sweat
out.
it. Yeah. Yeah. Wow. Yeah, what the hell?
Classic thing, man. Like, it, people always say, like, oh, if you bought Bitcoin in 2009, right? Okay, if I bought Bitcoin in 2009
Yeah.
and it went from $1 to $10 and I 10x my money and I didn't sell, am I smart or am I actually retarded? It's like, obviously hindsight
Yeah.
is 2020. You can say now you're retarded if you sell, but
Nah,
like, bro,
but
you
in the
10x your
moment.
cash. A
Yeah.
thousand turned to 10. If I didn't sell then and then 1,000 turned to 100,000 sell, am I smarter? Am I? I shouldn't use the R word, but what am I like? If I saw my investment go from 1,000 to 100,000 and I
Uh-huh.
didn't sell,
Uh-huh.
what am I? Right? And then it's like, okay, from then if I saw my investment go
Yeah.
from 100, like 1,000 to 100,000 and I didn't sell, what am I?
Yeah, you just become
Uh,
a
yeah,
fanatic that was lucky. Like that's why
yeah, yeah.
it's kind of like
Same.
poker, right? Like the whole thing of poker players getting mad about losing a hand because they played better than the other guy. It's like on that moment in which the cards were not shown, I did the right thing, you did the wrong thing. The fact that you won is irrelevant because I
Yeah.
was making the
Like,
right choice. Yeah,
dude, you
but they
have to be
still
like
won, so that
genuinely
fucking
insane.
boils your blood. But yeah, what'd you
If
say?
there, like, I don't think there's probably like less than 1% of the people that initially had Bitcoin at 2000, in 2009
Right.
that still own Bitcoin and at the same cost basis. Less than 0.001%.
Yeah, and many of them are like by
I'm telling you,
mistake because also they're fanatic.
exactly.
Like
Yeah.
it's there's nothing rational about it. Nobody was. There's no way really, right? Yeah, there's nobody out there that was like, oh, this is gonna get to 100,000.
Dude, yeah, you'd have to be clinically
Very
insane,
rarely.
or
Yeah,
or like
exactly.
you'd have to be in a situation where the money doesn't matter to you,
Yeah, yeah. It has to be.
where
Yeah,
you're
it
like,
has to be ideal. So you're investing
yeah,
for principle. Now, and that
yeah,
then yeah, again, you're not a yeah, you're just betting,
you just made a huge mistake
but you won.
and
Yeah.
you didn't sell it and you won. Yeah,
Yeah. Wow,
this is the
that's
case with
interesting.
everything. This is the case
Yeah.
with everything.
Yeah. That like every decision, yeah, there's no way to escape it. If you're making a rational
So,
decision, you're
Palantir
never
is my
gonna
most
have.
recent one.
Wait, what?
My most recent one of that nature is Palantir. It's like,
Right. You made a
I
rational
sold
decision.
Palantir. I bought Palantir at like 8 and sold it at 50. And then I was thinking, like, I started
Right.
selling at like 35 because I'm like, oh, like I've made like 3 times my money, 4 times my money, and the valuation is out of control. If I didn't care, or if I was,
Mm,
I guess, my words,
yeah.
if I was stupid,
No, no, I see
I
what you
would,
mean.
I would have just held it and made even more, like a lot more.
Right. Yeah, exactly. The rational decision cannot by itself carry you to like outstanding returns. Like outstanding in the
Yeah,
sense of like outrageous because they are
outrageous. Yeah,
outrageous in them, like they're irrational in themselves.
like the 1 million bagger
Yeah.
is just impossible to get to unless you are actually just
Irrational. Yeah, exactly. It's stupid. Yeah.
yeah.
Wow. Huh. What does that say about like is it better to then make some irrational decisions or is it better to just forego that and be like I will never like don't try to go for it because you will never get I mean unless you go for it there's no way to get it. Right? Unless you
Yeah.
are irrational, there's no way to get it. But then it's
I
like
think
being
I
a
think you just
yeah.
have to go for it sometimes. Like I think you just have to once the evaluation gets outrageous, you need to make a decision on quality over like quantitative instead of
Qualitative, yeah.
qualitative instead of quantitative. It's
Yeah.
like is the company still good? Like do you still think the company is going to do great things as opposed to
Right,
like
but
the
then it, right,
financial?
exactly. But then it becomes such a fanatic thing. Because even the
Yeah.
reason why I like Palantir so much were for reasons that I couldn't really translate. Like, I love the way the CEO thinks. I love the fact that he knows history. I love his views
Yeah.
on American politics and history. It's like, what does
No,
that
but
even
bro,
mean? You know?
$7 to $10 when I bought it, it
Yeah.
wasn't it was cheap. It was like 20, it was like 15 or 20 times
Hmm.
forward cash flows
Right.
with growth,
Yeah.
right? And then we also had the catalyst of
Yeah.
the
Yeah.
consumer facing business because back
Yeah,
then it
like
was
around
mostly
the
about
IPO when I did like an actual like discounted cash flow, I could get to an intrinsic value that, in my opinion, was above the current price without requiring any qualitative analysis. But then, yeah, not then it goes out the
yeah,
whack. Yeah,
yeah, it very quickly like changed, yeah.
yeah, huh?
Now it's just ridiculous.
Yeah, but again, right, right. But yeah, but there's no way now to. I cannot even approach it. Like even though I like the company so much, it's so out of the realm of a reasonable decision that even
It's
if,
insane. Even bro,
yeah,
just think about it psychologically. Like if you again, I use the Bitcoin example, perfect, right? You went from $1 to 100,000. Okay, in that time period, what would have happened? Let's say it was a good chunk of your net worth. It went from a 1 to 1,000, right? It didn't go from 1,000 10,000. It went from 1 to 1,000 to 400. And at that point, if you're still like if you're not scared of that, you're insane because it went from 1 to 1,000 to 400, from 400 to 10,000, from 10,000 to like 3,000, right? And you still did you didn't none of it fucking phased you, I guess, because you're actually clinically insane. And then went from 3,000 to
laser vision. Oh my
50,000
god.
to 20,000. Like it just you see you build a net worth. Like let's say you were 100,000, became a millionaire in one day or in one week. You're not a millionaire anymore. In fact, you've lost so much of your money, like real world capital, like 1,000,000, 200,000 in the span of a week or 2 weeks or a month. That shit would drive you crazy. Like just think
Wow.
about it, and then you'd
Yeah.
have to not sell. You'd be like,
Yeah, I mean
and
that's
and by the
why
way,
the Bitcoin holders, even the ones that yeah, the ones that hold now, even though they didn't get it at what dollar or whatever, they are all like they look insane because they are insane. They just
yeah,
winning to an
the
extent, and you
psychological effect, like it would. It's like you have to like because it's not just that you lost 80% of your money in the course of a month.
know.
It's also that every story about the company in that period is telling you that they're priced that they're just gonna die. Like you're gonna lose all your money. So like you have to make so many decisions where you're like, okay, I had 1 million, I still have 200,000 if I sell
Yeah,
right now and lock it in, and you don't, you just don't. You're like, whatever. I have 200,000. I might have zero next week. I don't care. And those kinds of decisions are insane. Like I don't know how you even do that. Like
yeah.
there's
The
no
only
person.
way, right? Yeah, it's like because it's also like you have no control over it. Like it's not like you can have that type of irrationality or have those principles on the basis of something like your own business, right, or your family, or your career,
Yeah,
right? Which is like, okay, I will double down even though because I can do something, I can work on it. But to be like,
yeah,
I'm doubling down on something I have no control over.
yeah.
Unless
It's
again,
crazy.
if you're really based on the principle, which is like, okay, this is a groundbreaking technology that cannot be replicated, so people will have to adopt it because there will be nothing better, like the Michael Saylor kind of ideal, right? It's
Yeah.
but yeah, but then yeah, you're a visionary or whatever. You're not an investor, I suppose. Or I mean, you're an investor in a vision.
You're
Yeah, I
just
don't
lucky, honestly.
know.
And forget about you're just lucky, dude, honestly. And forget about like, and this is like also a good reason why you should never have margin for that reason alone.
You
Like
should
you
never
just
have what?
get wiped. Margin, because you just get wiped.
Ah,
You would just
right.
get wiped.
Yeah,
An
right.
80% dip in your equity value would just wipe you completely. You get cooked.
Yeah, I wonder
You'll be
what's gonna
forced
come out
to sell out.
of the Michael Saylor Odyssey.
It's always gonna happen. It's gonna happen to Palantir too, dude. Like I think is like what you're saying. If we believe that, then Palantir will be $1 trillion company one day. But the issue is that before that, we're gonna see at least like 150%, 60% drop.
Yeah.
And then what do you do at that point? Like you have to figure out, like, oh, temporary thing, or like I believe in managing
Yeah,
turn it
then is
around.
when it gets hard because it's like, okay, now you can buy, but are you gonna fucking buy now? Because it's not gonna just go down 50% for no reason. Yeah,
Yep. It's
yeah,
crazy stuff, man.
yeah. But that's why we love this shit, bro.
Yep.
The
That's also
fucking
why
the
I've kind
uncertainty.
of like shifted of like I've shifted in like I never want to sell. Like, dude, I haven't sold any of my ACMR, and I'm up 10x on it pretty much, or like 5x.
Yeah, I mean, I think that's a good idea. I mean, I think it has like it goes by feel too. Like you'll get to a point, but it should be on the base of like the business too. But it's like exactly, you know ACMR so much more than you knew Palantir. I think, right? Would you say that? And there's probably more that you can know about it, but or
Yeah,
maybe not.
yeah,
Yeah, no.
I'd say so. Yeah,
Because I think that's really what gives the confidence. Like that's why I like doing deep research, and I want to get deeper into the names that we obviously have to do a lot of trimming names out, because that really is what gives the confidence. That's what make Michael Saylor love Bitcoin, or I mean I don't know, I cannot speak for him, but like that's what made me feel about Panther. Like when you really like what you say, the qualitative, like, and then you look at the numbers and such. Because you gotta find a good entry point, you gotta find it cheap and such. But really, right, the idea of like what drives you to not sell when everybody else starts to realize is that you know the company deeper to be like, okay, you still don't know enough. Like, but then you always gotta watch out though because there's always like the competition stuff. But I think that is the key because I think ACMR, yeah, you just gotta research it more to know like and I'm just saying, yeah, like investments, like
yeah.
you
You
gotta
guys got
know
algorithms.
you gotta know everything about the company so that
Yeah,
when a moment like that comes, you know whether it makes sense to sell or not, even if it's 100x.
yeah.
Right.
I know everything about the company.
Nice. Then you're
I
chilled.
don't, what I don't know is the new information. That's the stuff that you need to
What do you
every time
mean?
there's new information.
The
Well, quarterly
unexpected?
information. Quarterly
Mm.
information is just more. It just adds. You know everything. Like you get as deep as you possibly can with the information that's available to you, and that's when you make an investment decision. And then, but your opinion just changes constantly because you always have more and more quarters of data.
Yeah, I guess I mean kind of things like understanding what the technology does, understanding what any other available technology does,
Yeah, you
and
should do
then
that. You should do that right away
right.
before you invest, really, and
Yeah.
then it just changes. It's hard, man. Like, because it is what you're saying. Just you're thinking of it from a perspective of like go deeper into what's already known,
Yeah.
but that's not truly the case because you only have so much available at your disposal. It's more like when the new stuff comes out, you got to go deep into that. It's like a constantly evolving thing. You're
Hmm.
never going to know everything because there's always more. There's always going to be more.
Yeah. Also, the unknown unknowns too. That's the other thing that like kind of concerns me. Is like
Mhm.
if I'm learning all this about Palantir, I don't know about another company that might eat their lunch. It's
Yeah,
so fucking annoying. Yeah, like there's no way. It's
it's
like
crazy.
yeah, because at the end of the day, you rely on you
Just
just
buy the
rely on
index.
that general. Yeah, just by the index.
Just buy the index, bro.
Fuck yeah,
You'll outperform everybody.
yeah.
Like, swear.
Because
You'll
you're
be the best
everybody.
investor in the
Yeah,
world.
yeah, yeah.
You'll outperform every major fund. of all time, except for like two. There's like two funds that will do better than you over like a 20-year period. But the funny
Which
thing is,
ones? Oh, you mean two in like
I'm saying
randomly?
like out of all of them, you'll like one or two will do better than you, but they won't even do better than you over 200 years. You'll do better than everybody.
Yeah.
If you're
Which
thinking
is
about it from perspective of like your family, like your kids' kids and your kids' kids,
yeah.
you'll outperform every single fund that is currently in operation. And that's for sure, by the way. Like I'm not saying like that's not my opinion. It's a fact. You know,
Yeah.
over 500 years, over 1,000 years, over 2,000 years, you'll do better than everybody in existence, except for the people that are also buying the index.
There's something that feels wrong, but nothing I can say
Yeah,
to
but it's not.
disprove it. Yeah.
It's just it's not wrong, man.
Yeah, no, no, no. I'm not saying it is, but it just feels like a cheat code type of thing. It's like, how can it be so simple, that I can just,
Yeah,
because you say on the market, right? But it's
yeah.
like, the market seems like a static concept of like, I'm owning everything, therefore, how can I outperform? But it's because, like, what you outperform is the error, right? I suppose. Like, you
You,
eliminating the chance of error.
you
And that is
outperform
enough.
obsolescence is pretty much because all high flying returns of that a fund could achieve will drop to zero over the very long.
Because what? Because they
Because
cannot.
funds go out of business, and also it's impossible. It's like very very difficult to beat the market over long periods of time. Which that part we know for sure. The other part is just a fact. Like companies just close down. Like if a fund beats the market over 10 years, then if you bought that fund and held it for 10 years, you've outperformed the market. But then you'd have zero returns from then on.
But wouldn't you get
So
out of it? Like, that's why it's like, I mean, I'm not saying own, but it's like, wouldn't it make more sense to get in companies and then get out of companies and then buy new companies?
and
Like, the
then
same way,
sell
even
them.
through funds.
Yeah. And repeat that over time. Yeah, ad infinitum, right? But that's what I'm trying to
Yeah.
tell you that it's history tells us that that doesn't work over long term. Like funds can have stellar periods in which they destroy the S&P's return, like they do like 10x what the S&P did over 10 years, which even that
Yeah.
is difficult, but funds have done it. To do that over the next 10 years, it's impossible.
Right.
It's
But
never been done.
yeah, I guess it's the human, right? The human limitation, right? Because it's like the same guy that found the best AI company will not find the best spatial company or whatever, or the one that
Yeah,
found the best car company cannot be the same guy that find the best AI company because he's so deep in
exactly. Yeah,
in cars, right? So then,
yeah,
right, so right, and if I am an individual investor, I will be doing the same thing. I could be, yeah, I'm a young guy now. I know a little bit more about tech, so I might be able to find a Palantir or something. But then, as I get older,
yeah.
I just won't even hear about the next one, and I'll be so blindsided. Right. So the
Yeah,
best,
you've
right.
lost your edge. You've
There's no
lost your
way,
edge.
right. Yeah, there's no way to keep the edge unless
The
I
best thing
share
is to
it.
try to have an edge and outperform while you can, and then know when it's time to hang up your boots and just
Yeah, yeah,
dump all your
right.
money into the next
Right.
fund.
Or find somebody with an edge. But that also is
Yeah,
like I could be blindsided there too. Yeah, so just own the market,
you
yeah.
exactly, exactly.
Damn.
And
It
then
kind of it's kind of like a bucket of cold water a bit. Cuz it's kind of like yeah. I mean, I
yeah,
enjoy doing this, but it does feel like if I'm really looking for like outstanding returns to just say, just buy the market, But
mhm.
I
Buy the
wanna,
market and
I wanna
never lose.
play. I wanna sit at the poker table
Yeah, yeah. I
and
think
play.
like again, like we're smart enough and we know enough in which we have an edge now, but
Yeah,
I don't that edge cannot last. So that is
yeah,
all it is.
yeah. We'll see. We'll see how it plays out.
It's just like it's like athletes, bro. We're like athletes.
Yeah, fair enough.
We're in our prime right now. We need to make sure that we have outstanding returns as long as we can, and then when it's time to hang up the boots, like when you start reading about a company that does like
Uh-huh.
something that you can't even fucking physically fathom, and they become the biggest company in the world, that's when you're like, all right, maybe I should just stop being a dickhead and buy the S&P.
I should become a coach.
Yeah, like it won't even like I can't even tell you an example. too young to like everything that can come out now. I'll know it. I'll at least have the idea to know what it means. But in
Yeah.
30 years, the biggest company in the S&P will do something that is not conceivable to us right now.
Yeah. Damn,
It'll be
that's
like
wild.
it'll be like a company that turns people into cars that can like chip in you and you can like turn into a transformer. You know what I mean? Which even that is the fact that I'm saying it means that I could understand it if it happened,
Right,
but
it's,
it's
it's
like
even beyond that. Yeah,
it's even beyond that. I won't even know what the fuck is going on.
yeah. Yeah, that's like thinking
It'll be
of
words
flying
that are not
cars
real.
when you're in the 50s.
Yeah, it'll be words that are not real. Like all the words that
Like
even it's
Bitcoin, like Bitcoin. In the
like Bitcoin.
50s, nobody was fucking even thinking of a
Like what does Bitcoin mean?
cryptocurrency, a blockchain process of
Yeah.
authentication. Like
What
that
is
doesn't
what no, but
even
what is the
cross.
internet? For a guy
Yeah.
in the 50s, what is the internet, you know? The internet's not a thing.
Yeah, but
So he's
that one is a little bit, but yeah, but like, you just go back a little bit more, and then it makes as little sense. Yeah, exactly. When there's not even electricity, how can you even fathom the idea of the internet? Wow,
exactly.
yeah, bro, it's wild. Yeah,
That's where we're at. In 30 years, that'll be something that we
that
have
would be ass, bro.
no idea. And we're gonna be like in our 60s.
We're like dumbfounded.
We're not gonna know. Yeah, we're not gonna know shit about shit. You know what I mean? We're not even.
Bro, that's
Yeah, my
wild.
grandpa still uses a computer to manage his stocks. Like I get it all. Like I don't even know. Like
Oh my god, that's so crazy.
yeah. So just
Oh,
buy the
bro.
S&P, dude, and don't stress about it.
Even that we might even be. You know what's funny? Even that might be like, because ETFs are the things of our time too. You know, so even that would be maybe even
Yeah.
outdated. You know,
Yeah.
who the fuck
Maybe yeah.
knows?
To a point where a universal bank account
Yeah,
already just gives you the return of the market
yeah, like
on your
this,
idle.
yeah, or something. I don't fucking, yeah, there's no way to
There
know
are
it.
no markets anymore. It's just every person's individual currency is just constantly earning the return of the entire market. That would be
Yeah,
pretty
you have
cool.
a
We should
share.
make
You're a
that.
citizen share. You have a citizen share.
Yeah, we should make that, Loki.
Wait, how would it work? I'm
It's just a
confused. So
bank
it's just
account,
like a
a
bank
bank account
account?
in which any idle cash you have is earning the daily return of the S&P 500.
Hmm. You think that's feasible? Because we would have to
Mm,
buy the ETF and pay the fees. We would have to
yeah, it's not
discount
feasible.
this somehow. We would be like a really honest bank, like really. But then, yeah, I guess the reason honest banks are not because then you got to worry about things like bank runs. I mean, do you really? Or is
No,
that
it wouldn't be.
greediness only?
Would, this is like marketing. What it would really be is like
Uh,
we would just own the S&P and give people whatever return we can give them, which would be greater than bond returns, like money market returns. You know,
yeah.
we would give the best interest because, but again, like if we did something like that, we would get shit on if there was ever a run
Right,
on
because
our
exactly, if the
capital.
market is down, actually, precisely when the market is down, people will do the bank run. Right, that's why.
Yeah,
Yeah, that's why it's also like, yeah, it's unfair to think that banks are just greedy for no reason. They're doing it because they gotta
we would get
prepare,
yeah.
because then people get greedy too, and
Yeah,
then
they can't give you investment return. They can only give you bond returns because the initial capital is considered guaranteed, you know?
yeah. Oh boy, we really went on a huge tangent, huh? I don't even know. All right,
Hmm.
but that was fun though, and I think I made, yeah, I thought that was great. But
Yeah.
let's try to at least get through one. I mean, were we looking at
No,
one? Yeah. Wait,
we're
no,
not getting through
we
nothing, dude. We're done.
whatever. I'm trying to fucking rain on it. I mean, the thing even logged me out.
We're done for the day, dude. I'm
Oh, we're
telling you.
done. Okay. I mean, this is
Over.
gonna be 2 hour video. I mean, that's fine. But yeah,
But
I'm
go to
done.
the Excel. Go to the Excel
I was
sheet real
gonna
quick
check the
because
next cheap company. Oh, we did Comcast. We're gonna get rid of
yeah,
Comcast, right? Yeah, yeah, because we saw
yeah.
that it's just like not our thing. No, what the? That's not
And
it.
no, it's in communications.
Yeah. Oh. CMCSA.
I think, by the way, that means that we can get rid of. Nah, those are media companies. Yeah, we're good. We're good.
Yeah. Okay. Now let's get rid of. Well, I cannot
Ew.
sell it.
Ew.
Anyway, I'll do it when because I'm not gonna sell it
Intel
today.
stinks,
I ha
brother.
what?
Intel stinks.
Intel? Oh, yeah. I'll sell. So I gotta sell Comcast out of the fake portfolio and add Fannie Mae and Freddie Mac. Okay.
Yep. Yeah, tomorrow,
Yeah,
Monday.
yeah, I can't. That's why I'm like, I gotta remember to do it.
Can I ask you a question? Go and look at the news articles for ACMR.
Oh yeah, let's do. Should we do the AI thing or just ACMR news?
I think they just had earnings.
They did. Jump into the 10%.
Yeah, 13%.
Oh shit. Alright,
Why?
I'm gonna do the
Tech
perplexity
stock
thing.
squared. Tech
Perritos.
stock squared.
Wait,
Peritos.
where the hell is this shit? Wait.
Peritos.
Oh, it's
Why are you
comment.
searching?
My bad, I'm just trying to do two things at the same time. I ended up just doing the latter.
Peritos.
Perritos.
Little doggies.
There you go. Let me try to find the other stuff in the meantime. ACMR. That was today. Surge 13.7%, closing versus 52-week high, driven by a broad semiconductor equipment sector rally in the first trading day. The move was amplified by positive sentiment across chip tool makers, with CML jumping ACML approximately 8.4 on analysts double upgrade, citing accelerating. So it was like adjacent analysis on it, like sector.
Yeah.
Is that what they're saying here too?
Yeah, pretty much. They're just saying because the semiconductors had a good day.
All right.
Yeah, because it's a big single day gain, but I guess it's just that.
Latest headlines: Intel's chip ambitions stir alarm over China Link Tech. Oh, so they even have China Link Tech themselves?
Yeah, man, this company.
They cannot even get that shit straight. Yeah, but again, it's kind of right. If the government just invests in them for the infra. When is their next earnings for these people?
February.
In 17 days, yeah. No, January 22nd. Coming up soon. Yeah, we should have a calendar for this stuff too, I guess. Something, I'll figure it out.
I do on my Evans poop machine.
For the ones you have, right? Not for ours, not for the 92, whatever, right?
Well, you can put whatever ticker you want in there.
Oh, you mean the machine you built, or how do
Yeah.
I? Oh, okay.
Yeah.
Nice. You're really going AI full, huh? I mean, all of us, right?
Yeah, I was doing it on paper. I have on paper all this stuff in the past because I'm like,
we really are fucking boomers, huh?
I was not trying to use Excel because I just I don't know, I like writing it.
No, I like paper too. It's like we just
I have a
brought up
paper
on
and
it.
I have every cover, and then I have last full year net income, last full year free cash flow, price to free cash flow trailing 12 months, price to earnings trailing 12 months, revenue growth expected, earnings date, and that's it.
Nice.
And the earnings date is just so that I can know when I have to go and read the fucking bullshit, or when I know my portfolio is gonna take a shit or do well in that day. Pretty much.
Yeah, what do you think of this? For ACMR, ongoing US-China tech tensions create volatile sentiment and significant execution risk. Export controls and slower global adoption could pressure margins and constrain growth. The geopolitical,
whatever.
Right, okay. But in this scenario, I mean, I don't even know what that scenario looks like, but
come on, bro.
Yeah, I guess I'm getting back on. Yeah, but
US shit. Oh, stupid, bro. Every fucking 2 years news cycle is just this, bro. It's
okay, but there is a chance. I'm not saying it's a high chance.
Yeah, there is a chance.
So okay, so what happens to ACMR in the case of that unlikely chance?
Nothing, because they're based in China and all their customers are. They're saying if the US just stopped owning the stock.
So then, what do they mean here with export controls?
Nothing,
slower global adoption, pressure more.
Literally just
system. Okay. So you're saying, yeah, it's not even an addressable concern. Okay.
Yeah, it's always just this dumb shit. It's like, what happens if we go to war with China? It's like, bro, if we go to war with China, you're gonna have to fucking think about more than your portfolio.
Okay. No, I didn't mean that far off. I'm just saying more like if there was some type of export constraints. But is what you're saying is right, which is like these people are based in China and they sell to Chinese. So,
Yeah.
I mean, I guess yeah, but your
Yeah.
stock is not
It
gonna
would
get
dampen their prospects of entering the American market significantly, but again,
sure,
it
but there's
wouldn't
still
because they're an American-based company, so they could just build facilities here to meet demand here
yeah. Plus
if they really
this,
want.
plus they don't need the U.S. Strong backlog growth
Yeah.
early in the year demonstrates durable customer demand, supports multi-year growth runway in China-focused semiconductor spending.
Mhm.
Yeah, they'll be fine.
And again, it's a multi-thing. Like it's a U.S. company. That's the beauty of it is that ACMR Shanghai is where they do most of their business, but they're headquartered in the U.S., so they could completely circumvent any type of export controls by just building a factory here and servicing clients out of a factory from here if
Mm.
they really wanted to. Obviously, that would cause the stock to go down in the short term because they'd have to spend a lot of money, but then that shouldn't bother us because we don't like we care about the business and the business would do better over the long term if that happened.
All right. A different question. Did you end up seeing Marty Supreme?
Oh, yeah.
How is it?
Yeah. Oh, it's pretty good. Have you
Pretty
seen
good?
Uncut Gems?
No. Similar? I know it's
Similar,
the
yeah,
same
but
guy,
better. I
but
like it
better.
better.
Okay. I'll check it
Yeah,
out.
it's barely about ping pong. It's more just like a
Okay.
big anxiety-inducing thing. Like he just goes from one fire to the next,
Right. Okay.
fast-paced, just.
Right, but is the Marty's personality the same as the like is it a no, right? The guy's more like an
No.
ambitious kid, like it's not like a slimy guy that is always trying to put out fires, right? But
Yeah,
is
well,
his life a
more
mess
no.
as well?
Yeah, his life's a
Oh, his life's
mess,
still a mess. Okay.
and he's like a savage. Like he's
Oh,
just like
he's a ruthless
he's just like a
competitor. Kind
not not
no.
even.
Oh.
I'm telling you, the
Okay,
movie's
I just
not at
watched it.
all
Yeah,
about
fair
ping
enough.
pong. I mean, he is like a ruthless competitor, but the movie is more about like him just getting into all types of trouble, pretty much.
Unrelated to the competitive aspect, just to compare to the ping pong, exactly. Like it's not like him driving to the championship and then something like that. It's more like he has a lot of side things in his life. Anyway, I don't know why I
Yeah,
keep trying to spoil it for myself, but yeah, okay,
yeah, exactly.
I'll just watch it.
It's literally just Uncut Gems,
I
but
just
with
haven't seen it, so I guess, but yeah, I kind of get the point of like just a
because Uncut
thrill.
Gems is like he is a slimy guy, but he's not exactly. It's more like
Okay.
I mean he is, but like
Yeah, that's
you
not the
root
point of the movie. I just haven't seen it. Okay.
yeah you root for him throughout the movie because he's like going through it, and then
Okay.
everything's just like fucking falling down around him, and he's trying to manage a bunch of shit. It's just literally it's like Marty Supreme, but for an older Jewish jeweler,
Okay. Okay.
with a young ping pong like prospect because he's not in the Marty Supreme is before. So Marty Supreme, the real guy, won some
Yeah.
championships, but this is before that. The movie takes place before that.
Right. So before he's a
Nice.
winner, right? He's just like a kid
Yeah,
playing ping pong, right? All right.
exactly. It's when he's first coming up.
All
It's
right.
good, and it has a bunch of like, dude. The actors are
Uh-huh.
all like famous celebrities. They're not actors. Like for instance,
A lot of
his
cameos. They did that
main
in Uncut Gems too, right? The fuck? Yeah, he's
in
still there.
this
Sorry, a
one.
painting just fell.
Uh,
Yeah, what's up?
what?
No, one of the paintings fell. Just it's fine. It's under control.
So the main so his the girl in the movie is a famous actress. What's her name? Like the blonde one that's in it.
In what? I don't know actually. I've been just seeing Timothy Chalamet
The
everywhere. I
girl
don't
that
even
made
know
like
who else is in
Goop,
the movie.
Goop or whatever, like Goop.
Marty Supreme girl.
No, they're gonna give you that girl. No, not that girl. Go to
Oh,
the cat.
right. Gwyneth Paltrow. Paltrow.
Yeah, Gwyneth Paltrow.
It's
Yeah,
in the
Gwyneth
movie.
Paltrow.
Oh,
Yeah. So Gwyneth Paltrow's in the movie. She's like, I'm not gonna tell you what she is, so you can watch it. And then there's
okay.
another
I'm gonna
girl, which is
search.
his girlfriend in the beginning of the movie. She's an actress as well.
Uh-huh.
So those three are the only like true actors.
Okay.
The guy, one of his best friend is a kid that got famous by doing side talk. You know, side talk, the New York City thing where they interview like on the streets and it's like funny.
Yeah.
It's just like a kid that was on side talk that said some funny shit one time, and he's in the movie.
Huh?
Gwyneth Paltrow's husband in the movie is Kevin O'Leary, Mr. Wonderful or whatever,
Oh, okay.
the bald guy from Shark Tank.
Yeah.
the dad of the kid who's his best friend is John Katsimatidis, which is like a Greek politician from New York. He was like
Okay.
a senator or something.
Okay.
Tyler the Creator's in it. Tyler the Creator is his best friend that he plays ping pong with. And then yeah, there's a bunch of people. There's like old basketball players. There's like famous like New York people, not actors, right? Obviously, like just people. Like,
Yeah,
but
yeah, I see what you
it
mean.
doesn't even feel that way. That's the crazy part. Like Kevin O'Leary's great in it. The kid is great in it. Tyler the Creator is also really good in it. Like, it's
All
good
right.
shit.
Nice.
Oh,
Yeah.
Zion or whatever, the
Who is
Jewish girl.
this director? I gotta check him out. I haven't seen any of his
It's
things. So,
Safdie,
so
Josh Safdie or whatever. He's
okay.
young. He's a young guy. He's like his brother is a famous actor. Like you'll recognize his brother.
Benny Safdie. Oh, both of them
Yeah.
directed Uncut Gems.
Yeah. So this is Josh Safdie. He's a director. But then if you look at Benny Safdie, you'll recognize him from stuff that he's been in.
Okay, so this is only by Josh Safdie. Uncut Gems was both. And then you're saying I know the brother Benny.
Benny, yeah. Like
Oh,
yeah.
wait. Where do I know this guy from?
He was in like
Ah, he's made the
what was-
Smashing Machine? Oh, these two brothers are just on a run, huh?
he made the Smashing Machine this year. Apparently, it's not that good though.
Okay, yeah, I heard like just the transformation of Dwayne, but yeah, probably. Who
Yeah.
knows? But wait, where have I seen this guy?
I don't know he's been in stuff. I can't remember what he's been in, but
Let
he's an
me see.
actor. And then
Yeah.
now his brother's a director, and he's also helping him and stuff.
Acting, Piece of a Woman, Licorice Pizza. I remember who he
Oh
is
yeah.
there. But
Wait, he did a really good.
Oppenheimer, right? In Oppenheimer, I know who he is, right?
Yeah,
Yeah,
he's
one of the
also gonna be in the
scientists.
new one.
Huh?
He's also gonna be in the new Oppenheimer, the new Nolan, the
Oh, the
Odyssey.
Odyssey?
Yeah,
Oh. Oh yeah, here it is. Agamemnon. It's gonna be Agamemnon?
yeah.
How do you say in
Agamemnon,
Greek? Agamemnon? Or
Agamemnonas.
Agamemnonas. Ooh.
Yes,
And Menelaus? Or how you say that one?
Menelaus. Yeah, not bad.
Menelaus. Menelaus. Yeah, those were the
Agamemnonas is
OGs, bro.
he's the
He's
ruler
the
of Troy, right?
No, Agamemnon
Okay.
is the king of Athens. Menelaus is the
Uh,
king of Sparta. They're brothers. Menelaus is the husband of Helen. Helen is taken to Troy by Paris. Menelaus gets
okay.
pissed and tells
Yeah.
his big brother to help.
Okay. Gotcha.
There you go.
It's gonna
Is
be a
it?
good movie, I think, dude. I'm glad that it's a Nolan film. It's actually gonna be insane, I
Yeah, it
think.
looks. Have you seen the sneak peek of like the
I saw the
weird
trailer. Yeah.
helmet? Yeah, yeah.
Dude, Matt Damon is the main character. It's fucking.
No,
It's,
no, he's
it's Matt Damon.
Odysseus. Yeah, I mean,
Yeah.
it makes sense. The guy was Jason Bourne, and he's old enough to be an Odysseus after, or Ulysses after the
Yeah, I don't
war.
know. I would have gotten somebody a little younger, no?
What really? I mean, think about. I mean, if
Yeah,
you,
not Fat Damon, dude.
bro, the guy was Jason Bourne. Like, don't forget that.
Yeah, he was
But
Jason Bourne like 20 years ago, bro.
no, but it's like you don't need a young guy for the guy's supposed to be older. Like he's returning from a war. He's 55. It makes a lot of sense, bro. 55. A veteran soldier returning home. And he has a son, Telemachus, who is like 18 or 20.
I was fully not listening to you. My controller fell down.
I'm just saying, like Ulysses is a guy after a war returning home with an adolescent son, like 18, maybe even like older. So it's
Mhm.
like, makes sense that the guy would be 50 something.
Yeah, he's also wicked smart.
Yeah, you just don't like the guys from Boston. I feel like that's what you just don't like Matt Damon in general.
No, I liked Matt Damon when he
Yeah.
was younger. Now I don't know. I think it's bro. I saw him in
I
that
think
movie
he's great in
Downsizing.
many movies.
That
Like,
ruined his vibe for me.
which one?
You know the movie Downsizing? I don't know if you've seen it. It's
Ah,
like
I've
it's a
seen it. Yeah, he does some corny shit. But even some of the corny shit is good too. Like that one. Have you seen when he's like an informer for an FBI? He just keeps fucking up. Um,
which one?
it's like a
You're talking about the
funny.
one that's like sci-fi or whatever?
No, it's like a funny satire thing. It's like he's an informant for the FBI on like a corporate thing.
Is that new?
No, no, it has some time. Let me see. I know the name in Spanish, but The Informant. It's called The Informant. You've never seen this movie? I feel like it's your
No.
vibe type of
Yeah.
shit. You should check it out. It's kind of funny. I mean, it's pretty funny actually, but it's like this dry humor. It's a guy. It's like a very. It's like a guy that like turns off his on his company in the 50s to help the police, but then he turns on the police. He just keeps fucking up, trying to be smarter than everybody else, and then he gets so deep into trouble that he ends. He. I mean, I don't even. Yeah, just watch if you want, but it's
Figure
good.
out. I'm currently watching like Industry, so I'm locked in on that for
Okay,
now.
okay. And this is like a show.
Yeah, it's pretty bad.
Oh my god. Yeah, this looks
Uh,
terrible, bro.
I'm
What
just
is this shit, bro?
I'm too locked, bro. I'm too locked, bro.
Is that Jon Snow?
Yeah. He hasn't even made an appearance yet. I'm on season 2. He's not even in it. But
Oh my
dude,
god.
like so listen to this. This show, the first season is so bad.
But you
Like
kept
it's
watching. You're just the cringe lord, bro.
yeah, but like listen, it's got potential, bro. It's got real potential, bro, because
Why?
the characters, I'll tell you why. Look, the actors are good, right?
Okay.
The writing and the plots of season 1 are horrific, bro. And also like th- so it's like the show is they all work in IB. That's what the show is,
Okay.
right? They're all IB first years,
Okay.
and it's like a mix of like, have you seen Succession?
No, but I can't. I know about it, but no, I
It's
don't really
like
know.
Succession, and then but also it's got aspects of Euphoria because they're all just like degenerates, like they do a bunch of drugs and fuck and shit
Ah,
like
okay.
that.
So yeah. Okay, I see what you mean.
They're gay and they're not gay and they're just doing a bunch of fuck shit.
Yeah. All right.
Now in the second season, it's focusing more on the Succession part of it, which is good. Like that's where the real potential is because the first season
Okay.
focused too much on the drugs and the sex, and so like and when it came to like the business stuff, they were writing it so bad. Like they make this scene right here, that this picture,
Yeah.
it comes after like one of the most retarded. I can't use that word. It comes after one of the
It's
worst,
fine, bro. What?
like one of the worst plot twists that you can ever imagine. Like it's like a plot twist at the end of season 1 where it makes absolutely no sense. Like it's so ridiculous. Like you don't understand like how any human person can have this kind of decision making process. But
Right, like, or even the writer, like, who would write some shit like that, right?
yeah, and this girl is the main character, and she sucks, bro. Like she's the worst person ever, bro. Like you literally see the shit that she does, and you want to like, I want to kill her, bro.
But
But
you
that's
mean
why
the
it's good. That's why I
character or
feel
the
like
actress? Is the actress
no, all the actors are good.
okay? It's
This
just the
the cast is
roles.
really. It's the writing and the people who are they're meant to be are all terrible. They're all terrible people. They're all like self-absorbed, insane, like sociopaths that
Okay.
make insane decisions.
Is it kind of isn't White Lotus kind of like that or no? I haven't seen that either.
White Lotus, I've seen like one season. It's
Oh.
not exactly like that. White Lotus is like it is like a rich person. Like they're all rich people that suck.
Yeah, I thought it was that,
So
like
yeah,
a lot of okay. But
yeah,
these are
yeah.
more like
It is.
entry level rich people, right?
These are like young kids that work in finance, so they're like super stressed out all the time.
Right.
And they're also like really worried about their careers because like everyone's telling them all the time like, yo,
Yeah,
you're gonna get
bankers.
cooked.
Yeah, they're just entry level
Bankers, yeah.
bankers, yeah.
The black girl sucks ass. The white girl sucks ass. The guy on the right there dies in the first episode from
The Indian
stress.
guy?
Yeah, the black guy is gay, and he's super annoying, but he's getting redeemed. He's getting redeemed.
Wait, but now
The black
here.
girl,
Oh, yeah.
this is like
What
this is
about
the
this
same people.
guy here? He's also gay. He
That
looks
guy is
gay.
that guy's arc has been horrendous. He's useless. He's
I
genuinely
still don't
useless.
get it. Do you watch it for the potential? Are you like investing in the show? Like you're not watching it for
Yeah,
what it is. You watch it for what it will be.
yes, exactly, bro. It has like it's got the intrigue and the quality of actors where I'm thinking like
Oh my
they could
nah,
really
bro.
do some
You're
good
gonna be
shit.
just. This seems like you're gonna be scammed out of your time, bro. You're gonna
Nah,
finish 5 seasons still waiting for it
so
to get
far
good.
no, but so far I've been no, look at the Metacritic scores for the seasons. It's
Okay,
getting better.
okay. Oh shit.
It's getting better and better, dude. I don't even know yet because I'm only on season 2, episode like 4 or something.
Where do I go to Metacritic to see? Like IMDb or?
You just go to like, just
Hmm.
type in industry show
There. Metacritic per
episode rating.
season.
No, like, okay.
69, 78, 86. Okay.
Yeah, buddy.
Uh,
Yeah, buddy. And
uh,
I can already feel it. Like, I can already feel it. The second season is better than the first because the first was so bad. And I think
Universal
that,
acclaim, critical praise for different characters
and
and plot.
and mind
Okay, good
you,
eye, good eye.
season we don't even have Jon Snow yet. He's not even in it. And
Mm.
according to like all the marketing material that I've seen for season 4, he's very heavily involved. So we haven't been introduced to him yet.
Wow, they did it.
God, was the first season so bad, dude. And this guy that you were saying, the white guy that I'm like, he has no redeeming qualities.
Yeah,
He genuinely sucks ass. Like he's so useless, and he's like a pussy, bro. Like he'll just fuck on anything and does a bunch of drugs. Doesn't know shit about the job.
mm.
It's just, yeah, he's like a nothing character, but you like him. You like him because he's the only like normal, like you know what he is. You know what I mean?
Yeah,
The rest of them suck ass. Like you root for them, and then suddenly they just do some shit where it's like, my God, bro, like who the hell would even do some shit like this? Like only the devil would do. The little black girl that's the main character is so like you want to like her so bad because her story is terrible, like her backstory, but she just does like fuck shit all the time, bro. She's like accusing people. She's like turning on people, like for no reason, mind you, you know.
yeah,
And she's always crying. She's just always crying, dude. Like
yeah. I mean, I
they
don't
give
know.
her the fucking
I'm definitely not watching it, but I find so you already feeling that potential in season one. That's what you're telling me.
yeah,
That's so weird, bro. But you got it right, bro. I
because
mean,
of the concept. The concept that they were playing with
mm.
made sense to me. And I like that the show, so like the whole thing is like it's a finance show based in London. And everyone know like
Oh,
the whole
it's
thing is like
British.
it's
Oh,
not like yeah,
oh.
it's an American bank, but it's about their operations in London.
All right. Are the actors speaking American or British?
The main character, the black girl, and her mentor, both Americans that
Oh,
work in London.
okay.
The white British kid is British, obviously. The white girl is like everything. Like she's like a rich girl that's like she's not British exactly, but she's like European or whatever.
Okay. Everything.
The black kid is like a as British. It's got
Okay,
potential,
okay.
bro. It's
They're
got
just Anglo-Saxons. Yeah, okay.
yeah, but it's just God. That first season was just like, but not bad. You were using I think you're using the lens of like some of the other stuff I've watched. It's not like that at all. Like it's
Okay,
good.
that's what it looked like from the poster. But yeah, it seems better
Yeah,
than
no,
that for sure. Is
it's
it?
not that.
It's better
Yeah,
than Suits then.
yeah, it's way better than
Oh,
Suits.
okay,
Yeah,
okay.
way better.
I thought it was kind of
Quality
nice.
wise, yeah, like
All right.
less enjoyable than Suits though,
Oh,
but quality wise, like way better.
because Suits is more what, like more snarky or something?
Yeah, Suits like enjoyable from the perspective of like when it's like it's not a good show, but it's fun. Like it's fun, and the characters are cool to root for, and like
Right. Okay.
they're
Okay.
just cool characters and stuff. This one sucks because the writing was subpar. The actors are really good, and you can tell the show is high quality. Like the budget was high and all this kind of stuff, and the actors
Mhm.
are good. It's just the writers really were sleeping essentially. Like they just had a terrible, like a shitter of a first season.
All right. Okay. So Marty Supreme, good. This show, good. But yeah. All right.
Mighty Supreme, good. One battle after another, mid.
Yeah. Okay. I heard. Yeah, mixed signals about that one. The other one I gotta check out is Avatar. I guess I've heard it's
Oh,
really
is that
good.
out?
The third one, it's out in Spain, so it's gotta be over there.
No.
We have it
I
dubbed
fell asleep
already.
during the second one, dude.
Huh?
The second one, I went to the theater
Oh, I
for a
haven't
late
seen
showing.
it.
And I knocked out inside.
Yeah, I mean, I heard it's not. It's weaker. But anyway, we should end the stream. I feel like this whole it's getting. I mean, I don't know
Yeah.
if should I include that in the video or just leave it as it is. Yeah.
Oh yeah, include
Yeah.
it. Yeah.
All right. Well, then, thank you,
If you got
everybody.
this far, if you got
Yeah.
this far in the video, tell us: would you rather have $1 for every step that you take, or $5,000 for every beer that you drink?
Let us know in the comments. Subscribe and
Mm.
like. I'll see you guys next week.
Dislike this video if you
Don't do that.
disliked it.
Don't.